Good morning, everybody. Welcome to NinjaTrader Live. My name is Jim Cagnina. I am Senior Market Strategist, and I am joined in studio by our Senior Economist, Tracy Shuchart, aka Shy Girl. Good morning, Shy.
Good morning, all.
And we're also joined in studio with our macro strategist, Craig Shapiro. Craig, good morning. How are you?
Good morning, Jim.
We have an awful lot of stuff to talk about. Stock indexes across the globe are all in the red. We have Panera spending millions to make better sandwiches. But let's go ahead and start with the news, Shy. What else is going on?
All right. So at 3:10 a.m. this morning, the BLS posted the October 18th jobless claims numbers. Random week. That data was 232K, with continuing claims at 1.957 million, a bit higher than had been expected at 1.947 million. Very strange data dump in the middle of the night. Very strange week to do that. Not sure why they skipped some weeks. But we will have jobless claims. I'm not sure what week it's going to be on Thursday at 8:30, and non-farm payroll also Thursday at 8:30. We have Bitcoin ETF investors are in the red after 89,600 level breaks. We have rebounded since then, but that is the kind of watch level because the average cost basis for all ETF inflows sits at approximately 89,600 according to Glassnode. So we could see excessive selling if we get below, or if we stay below that for any period of time. We also have, exchanges, whales, and funds dumped 417.2 thousand Bitcoin, worth 40.5 billion today, which is the biggest single sell-off ever recorded. So keep an eye on Bitcoin for sure. We have Amazon and Microsoft are downgraded as Redburn breaks ranks with peers. We're kind of talking about how the narrative with AI is kind of changing a little bit. And so we are here is the first analyst to downgrade from hold from buy. But still, this is also something to watch, because more than 90% of analysts covering these stocks have a buy equivalent, no holds bar, just to jump right in. So just notable that we're starting to see some analysts maybe breaking ranks with that and kind of seeing a little bit of froth in that market. We also had on kind of the economy front, we had Home Depot reported today. They cut forecast on weak demand for big ticket items. So we are seeing a little bit softness in the consumer on particularly big ticket home purchases. It said that it expects adjusted earnings per share to decline 5% from a year ago. That's lower than previous forecasts. They are down 2% in pre-market. Closely watched for the retail space will also be Target on Wednesday and Walmart on Thursday. They are going to be obviously very big to see kind of what does the health of the consumer look like. Another interesting thing, back on AI a little bit, you had no firm is immune if the AI bubble bursts. That came from the Google CEO. So the Google CEO is literally calling AI a bubble, which I find just fascinating. He said that no company would be unscathed if the artificial intelligence boom collapses, as soaring valuations and heavy instrument in the sector fuel concerns of a bubble. He said that the current wave of AI investment was an extraordinary moment, but acknowledged elements of irrationality in the market, echoing warnings of irrational exuberance during the dot-com era. This comes from the Google CEO. Fascinating. NVIDIA, obviously, set to report after the bell on Wednesday. Looking at options activity, it is set for a 330% 21 billion price swing, about a 7 Nifty options implied about a 7% move for the stock in either direction after the results. So that should be that, and that is the highest that it's ever been. So that'll be interesting to watch, to say the least. So a lot of options activity on NVIDIA, obviously. And then back, we have, going back to just talking about small caps versus mega caps. We talk about that all the time. Everybody loves RTY on this channel. So we have reverse stock splits globally have climbed to a record this year, underscoring the strain on small cap companies struggling to stay listed, even as the AI fueled rally lifts technology heavyweights. So we have nearly 80% of the companies that executed reverse splits that had a market value of below 250 million, which puts it in the small cap sector. So just something else to watch, because we are seeing kind of some signs of financial stress. I mean, you don't often do a reverse split if you don't have signs of financial stress. And so when you see a lot of these reverse splits happen in smaller cap names, again, it goes kind of back to like the K-shaped economy, but for small caps versus mega caps. So just something also to keep an eye on.
Oh, that's awful lot of stuff. Thank you, Shai. Craig, what stands out for you as the story of the morning?
Yeah, look, we've been talking about this bifurcated market, this bifurcated economy for several weeks, several months now, and look, I think we're finally getting to the point where the narrative on the AI part of the trade and the AI part of the story is changing and shifting in a manner that is, starting to become incrementally concerning. And it's this dynamic of companies moving from internally financing all the CapEx build out to having to hit the debt markets in order to fund growth. And so, we saw yesterday with the Amazon big investment grade issuance, and well received and upsized, but again, just another dynamic in play where incrementally crowding out other areas of the economy that need borrowing. And so, look, I think as the returns associated with these investments are being questioned, we're seeing that show up in the stock price performance of these leadership names. And Tracy mentioned the downgrades this morning, and so this was the stool that was keeping the indices together. This was keeping the market afloat. And now that you're seeing one by one names getting chopped off that have been leadership names, whether it be Oracle and Meta and the like, folks are getting incrementally concerned. And it's not as if the rest of the economy is doing particularly well. The rest of the economy has been weak, and it really is only getting weaker post the government shutdown. And so it'll be interesting this week. We are getting the resumption of data. And look, I think what we're seeing is the combination of NVIDIA reporting after the close on Wednesday, payrolls Thursday morning, and options expiry on Friday is creating just a massive hedging dynamic here. You see it in the VIX. VIX curve has actually gone inverted here. VIX expiry for November contract is Wednesday morning, but VIX is elevated across the board. There's plenty of hedging, and it seems fairly bifurcated, right? I mean, if NVIDIA blows the cover off the ball here, I think people will feel a sigh of relief that the story is well intact, and we probably can continue to see this tech outperformance into year end. But if they don't, then we have a larger issue, because it's not as if we're going to get rotation out of tech into something else. People are going to become increasingly more concerned about where can I hide between now and the end of the year. So Wednesday after the close, Thursday, Friday, back half this week is going to be fire.
I mean, do you think, a lot of the talking heads are trying to defend the stock indices right now by saying stuff like, well, we're just in a rotation, we're rotating to other asset classes. But when I look, internationally today, as an example, the DAX is down, Eurostock is down, Nikkei is down, Kospi's down. It seems to be systematic instead of a rotation. What's your sense there?
Yeah, we also made there were 131 new lows yesterday. It's 52-week lows yesterday. That's like a 6-month high for the new low indices. So we're finding it harder to find places to hide. Pharma, biotech, that's been an area where there's been some capital rotating into. Utilities and some of the defensive stuff is held up better, but it's not as if there's enough market cap there to really keep the indices alive. And so, but broadly speaking, it's about the indices are largely about the flows, right? And so this week, being an expiry week, very important. We obviously have the zero data expiry flows. But the systematic flows, if we continue to see higher realized volatility, there's going to be some forced selling that comes out of the vol control community. The CTA community is starting to get closer to levels that would trigger selling in any instances. And so while you do get share buybacks as a positive flow, we're seeing some of the systematic flows going the other way. And if we have labor continue to struggle, then those passive inflows into 401ks, which have been very supportive, start to become less supportive. There's also stories out about 401k hardship withdrawals, continuing to escalate into the end of the year, so pulling capital out of the markets. And so, if we don't have that passive flow into the tape, it's going to be harder for the broad indices to stay elevated here amidst what is a continuation of a suspect economic outlook. And we have a Fed that, as of right now, really doesn't seem ready to contribute to a pace of easing that really market participants want to see.
Yeah, that makes sense. Yeah, I mean, at what point do we start talking? And Shai, at what point do we start talking about the commodity sector being the place to invest in? Right. A lot of times we talk about it, but there's not a lot of follow through. I mean, let's talk about energy to start with. I mean, nat gas, and we had some information about nat gas earlier yesterday about stocks rising slightly faster than normal at this time of the year, despite our big exports. I mean, when are these what's going on, first of all, with nat gas and the other commodity markets?
Well, again, I keep saying it's going to be a story for next year as far as the energy markets are concerned, because it's been largely neglected in this whole AI spree that we've been on, and all this capex with no energy behind it, meaning actual energy, electrification, et cetera. And so I think it's going to be a story for next year, and it's going to be a moment of, oh my God, we should have thought about this 5 years ago. What are we going to do now? Right. And so we could get a squeeze in the energy markets. As far as nat gas is concerned, we produce a lot of nat gas, right? So we are never going to, well, never say never, but we're not going to have shortages like other places. We have plenty to export. We have plenty for this country. The problems that we have with that gas in this country is the lack of midstream, so the lack of storage and the lack of pipelines so that it's distributed evenly throughout the country, which is why you see, gas prices higher in some areas of the country, particularly the Northeast, than you do in the rest of the country. But, we have a ton of nat gas. We're not going to see prices like Europeans do, and that's a good thing, right? You don't want skyrocketing nat gas prices. That is bad for, data centers, but it's also bad for the consumer. So, I mean, nat gas is still trading, above $4, which is amazing, because if you remember, for years we were between a buck and $2. I mean, literally for years. So at $4.30, this is not a bad price for nat gas. And, the crude market is in its own la-la land. It doesn't really care what markets are doing. It's been super flat during this level of volatility, which is a good thing to see. So we're not selling off like crazy. I like that. Again, I think crude's going to be a story for next year. And so, holding this 59.60 works well for everybody for the time being.
Yeah. Okay. Well, we'll keep our eyes on it for sure. I have one of these, ETFs for copper, and every time the price dips, I try to buy a little bit more. I'm waiting for this huge rally in copper. The world needs copper, and I'm waiting for this huge rally because I got all of this ETF. Is this going to happen? Am I in the money here?
I mean, copper's going to be, again, I think another story for next year. And if you look at the copper market in general, we're still holding, around that $5 mark. That's good for copper. Again, I think it is going to be a story of for next year. And I think really right now, as we're starting to see some cracks, perhaps with the consumer and maybe some cracks economically speaking, it is still somewhat of a barometer of, global health. And so if we start to see more weakening in the economy, then it's going to be hard for copper to kind of skyrocket. Again, the fundamental story is there. You need a ton of copper for data centers, et cetera.
Well, it gives us a nice kind of a nice segue into housing. And, Craig, I'm hearing a lot of stuff about the housing market still just being stuck in the mud right now for a combination of factors. Affordability is a big one for the younger buyers, apparently. What kind of stressors are driving the housing market?
Yeah, it's another one of those bifurcated situations, right? You have sellers who are reluctant to move their inventory at prices that probably where the market should clear. They see price gains. They see how well housing prices have done since COVID and are not really desirous of cutting prices aggressively yet, and are generally locked into low rate mortgages, and so don't really feel the impetus to rush to move. I mean, I think the big thing for the housing market, though, historically, is employment, right? Employment growth is what will drive stronger demand for housing. And so to the extent that that's not the environment that we're walking into today or likely to get into 2026, it's more likely going to lead to a struggling housing market. Now the administration is hip to this. They're thinking about a variety of different things to try to boost activity in the housing market, make housing more affordable, whether it's 50-year mortgages or possibly portable mortgages where you could sell your house and sell your mortgage alongside that. That there would be some issues there for the MBS market and for banks and what happens. But I think the administration realizes how important housing is to the overall economy, but it's a stuck market for now. So, buyers are lower, sellers are higher, and ultimately, this is probably going to rectify with lower prices, before we get, they really got moving here. And those Fed rate cuts really aren't doing much to drive mortgage rates materially lower at this point yet.
And yeah. I just wanted to mention really quick, we are supposed to get ADP weekly, the weekly number, not the monthly number. And that was supposed to be at 8:15, but it was late last week. So, we'll shout it out as soon as it comes out.
Yeah, and are they gonna continue that even that weekly release even once BLS kicks back into action?
I'm not sure. I think they should not, because it's really on a 4-week rolling basis, and it's kind of conflicting with their monthly numbers. So it's kind of making things a little bit more confusing, actually.
Cheech in the chat just said, welcome, chat. Appreciate everybody being here today. You always make me laugh. Just reminded me that there's no more pennies for copper, apparently, being minted at the U.S. Mint. Is this a long time coming? This is a silly topic, I think, but I mean, who uses a penny anymore?
So no, Canada got rid of pennies in 2012, I believe, and they're mostly made of nickel, not copper.
Oh my God! Well, let's talk about the jobless expectations, right? I think the big, Waller talked about it yesterday. I think let's start with Craig. When this data does come out, I mean, what's your sense of, is it going to be good, bad, ugly? What do you think is going to happen here?
Well, my sense is it's not going to be pretty. I think the pace of job hiring clearly has slowed. The uncertainty in the economy, the AI outlook has put a lot of companies on hiring hold, and we've obviously been seeing more announcements of layoffs from very large companies in between now and the end of the year. To the extent that stock prices react well to layoff announcements, I think you're going to see more companies do that. So the labor outlook doesn't look particularly good. I think part of the reason, we're going to get the September data this Thursday, but we're not going to get the October data most likely And I think part of the reason we're not going to get the October data is because the government laid off several 100,000 people earlier in the year, and they had furloughs that ended on 9/30, and so those people, would be counted as unemployed in the October number, and that's probably just a number that no one wants to see. The government's not going to want to put out some sort of massively negative, job number, even though those are jobs that were lost, months ago. So I think we're not going to see that number. But look, the pace of hiring has been weak, and the layoffs are accelerating, and Fed rate cuts here probably are needed. But it's not even really clear that 25 basis points cuts here or in January or in March are really going to do much to arrest the uncertainty and lead to more hiring. So Fed's in a tough spot because inflation is still just too sticky, right? And I know Waller mentioned this a little bit yesterday. Like it doesn't matter that we've been running above target for 5 years. We got to cut, but I think there's clearly a group on the Fed that doesn't believe in that and wants to make sure that we don't have a reacceleration of inflationary pressures next year, particularly in essential items like utilities and water and power and insurance. I mean, these things are not going down at all. So, it's the Fed is cognizant that it doesn't want to be dealing with a reacceleration of inflation, into the middle of next year that may force them to even be thinking about hiking rates. I think they'll never hike rates, but particularly with Trump at the looking to replace the Fed head with a dove. But I think the Fed sees that and doesn't want to be in a position where it becomes conflicted next year and may have to even start thinking about that.
Yeah, I mean, Shai, what's your feeling on how the jobs creation's going?
I think that we are seeing it slowing in the labor market. We'll have to see. We're going to get month-olds. We're going to get September's numbers. I'm not sure how impactful that's going to be. And October data, they're saying we should get half of the data and half not of the data. So whatever comes of the October data, it's just expected to be a giant mess. That is all I have to say about that. I mean, I think it's going to be because the survey data is off. They're counting on companies still reporting when the government, even though the government was shut down, who knows who did, who knows who didn't, right? A lot of companies probably went, well, the government shut down. Why do I need to report this? So to me, it's going to be useless information and just a giant mess as far as the data is concerned. So people may overlook that.
Yeah, but I also think it's going to be every single detail. Now, we've been so starved for data. Every single detail is just going to go under a microscope and criticized and analyzed. And it's going to be a little bit overwhelming, I think, when the data first hits the street because everyone's so thirsty for it, I think. I don't know. I mean, they're going to extrapolate and do what you economists do. The market's going to react to that, I think. Anyway, that's my thought. So.
Oh, yeah, definitely be a market mover. I'm just saying from a standpoint that the data is going to be a disaster.
Yeah, I gotcha. Well, we have a couple minutes left. Craig, any last minute thoughts going into today's trading day?
Yeah, look, I mean, I think, like I said, Wednesday, NVIDIA, Thursday, payrolls, Friday, expiry, volatility is going to be elevated, right? It's almost like we have this episodic vol event, probably as big as, a Fed meeting, right? I mean, vol is going to be extremely elevated into this event on Wednesday afternoon and into Thursday morning. And so, often what we see is vol selling after the event, right? Better to have traveled than to have arrived, right? And so once we get the event out of the way, the likelihood that we're going to get vol selling into the end of the week is probably pretty high, unless the NVIDIA completely craps out, or unless the payrolls are a complete disaster or a complete home run to lead to further acceleration of volatility. We're more likely to see volatility selling, which we know has typically been supportive for flows for the equity market. So it could be one of those situations where, regardless of the type of data we get, we rally into the end of the week off of oversold because of some of that volatility coming out of the market, but. Structurally, as we transition to the end of the year, I am still concerned about the pace of economic momentum, and the AI capex story, has a yellow caution flag up. So, next, I don't think we're locked in for the Santa Claus rally yet. I think there's a lot of wood to chop ahead of us.
All right. Well, we'll see how it goes. It'll be an interesting end of the year for sure. But we've been in this position before where it's like, all right, no Santa Claus rally, and then it happens. So who knows?
And then he shows up.
Yeah,
I know.
absolutely.
Guy just shows up every time. In any event, all right, awesome start to today. Craig, really appreciate your good commentary. Shai, I'm going to talk to you in a minute right after a really quick edge report. All right, let's start with, by the way, congratulations, Selma. How about that? That was awesome. Selma and Nick, end of day yesterday, epic. If you haven't watched it, you should go back and watch yesterday's NinjaTrader Live to see how they were competing neck and neck for so long at the end of the day for the NinjaTrader Cup. It was pretty fun. It was a great futures trading episode. The 30-year Treasury bonds. Right now we're still stuck between this consolidation range. You see my yellow rectangle here at the bottom, 116.12, give or take a couple ticks at the bottom. At the top, we have resistance up here at 117.19 or so. It's about a handle, a couple ticks separation. We've just been traveling back and forth, back and forth, back and forth since October 31st, happy Halloween, into this consolidation range. Today's no different, although we do have a little bit of a bid here. We're right at that 8 and 50 EMA. Those two EMAs are tangled in love right now. We have that 21 a little bit further up. So we're getting into that rotation zone right now. But again, probably nothing doing until we get some data or some more Fed comments or some more Fed action. I don't know. Yields are down here. Last time I checked, 30-year at 4.71, 10-year at 4.1. The Bitcoin is a story for me right now. I'm going to pull this up, and it's going down. I'm yelling timber. Just to quote Pitbull. This is a pretty ugly chart. So old kind of double bottom here, area support right around that, just around the 100,000 level. This is the November contract, folks. Remember, it's a monthly contract, and this is in a 6-day. Channel, just downward channel. I mean, that's all I could say about it. And if you kind of squish in, we had these early lows, right? This is the March and April lows here in the Bitcoin around that 78,000 handle. I'm not, I don't know. I don't think it's unrealistic that we can get down there right now, at least until some buyers show up and new area support kind of materializes. Right now, there is none. So the Bitcoin, again, is taking it kind of hard. Intraday, there's probably some levels to consider as well. Let's take a peek at a 30-minute chart. We're trading above the session VWAP. That's positive. We're trading above JAX 3, right in the middle of the London initial balance. Not a lot of range there as well. But JAX 1 is kind of defining the top of the conversation. This is where resistance is sitting right now at 92,000. If we get a breakout above that, we do have some targets here. We got the pivot. We have a blind spot from MenthorQ. And then we really have that JAX 2 level at 94,000. Above that is that one-day max at 95,000. And we've seen the Bitcoin routinely hit the one-day max or the one-day min. On the downside, we have that one-day min right below the session lows here, and that's at 89,000. And then below that, we have some more targets too, JAX 4 and S2. So right now, kind of, I don't know, volume profile is very immature, kind of wonky, but we're kind of moving sideways here on the Bitcoin. This session today. So we'll see what happens when the bell rings. Let's shoot over to the E-mini S&P real quick. Let me get the daily chart up. Got a lot of stuff. Oh, this was my cheat sheet for the trading challenge. Let's move that out of the way. Daily candle right now, we are, as someone in the chat said, I forgot who said this, price is dancing all over Pax's quarterly pivot, 66.58. I have that in yellow. That's how important that is. So that's exactly what we're sitting on right now. We have a wick that dangled below it a little bit. We have, again, this isn't as caustic as the Bitcoin, but it's pretty similar. 1, 2, 3, 4 days of some intense selling. I do have this kind of gap down here that's going to be a target for me later on, 66.05, should we continue the selling on the downside. And then in the yellow, I just have last week's weekly range, high to low, kind of defined. We're already below last week's low, so that's probably a little bit less relevant. MACD, pretty consistent with what you're seeing on the candle chart right now. Nothing really to talk about. Intraday, though, we have some really great targets here as well in the E-mini S&P. Now, point of control is starting to get important here. 66.60 is the official point of control. We have a competing point of control a little bit up higher, 66.73 at JAX 4. We'll see if this fills out, if this gets a little bit more normal right now. S1 is defining the bottom of the conversation, but there are targets to the downside, including JAX 2, which is at 66.25, and that one-day min, which is at 66.17. We'll round it up a tick. On the upside, we have JAX 1 again at 6,700. We have JAX 3 and that 1-day max all the way up here at 67.66. So there's some important JAX levels there to think about. And we have the commodity channel index isn't really telling me anything right now on this 30-minute candle. So that is this morning's Edge Report. Shy.
I'm back. I was back fast. I was
You
not
are big.
prepared for that.
Preview our guest today. We have a special guest today.
Yep. We have Chris Irons of QTR Research. He has a Substack, QTR Fringe Finance, and a very popular podcast. Also, QTR or Quote the Raven is the name of his podcast. He was a Wall Street analyst for a very long time and has kind of stepped out against that. And well, you'll see.
All right. Let's get Chris in here. Chris, good morning. How are you?
I'm great. How are you guys? Good morning.
Good. Pretty good. You're giving up your secret identity as a Marvel superhero, the Green Arrow, right now on live on the stream.
Yeah, well, I just rolled out of bed and put on the first thing that I could find that would make me look decent. So, matter of fact, before Twitter went down this morning, I knew I was supposed to do this morning, but for some reason I forgot. And I was laying in bed and I saw Tracy's tweet. Hey, Chris Irons is joining us, and I'm laying in bed like, oh, fuck, I better get out of bed. So here I am. I'm dressed, I'm decent, and I feel all right. And I got a cup of coffee. How are you guys?
Pretty good. Thanks. Pleasure meeting you. Nice being here. Let's just get right into it. The first, what's going on? Let's talk about interest rates. Let's talk about the FOMC. Let's talk about Waller's latest comments, which was actually kind of bearish, I thought. What do you think is going on in that space?
Well, you can prompt me with Waller's comments because I don't know them off the top of my head. But what I will say is that when I joined FinTwit in like 2012, Tracy was like one of the only OGs that was around back then. And I think she predated me on FinTwit. She's been around forever. And I can't believe this is the first time we've ever talked, which is crazy because we have been following each other and tweeting with each other for like 15 years or something. So let's get that out of the way. Now you can prompt me with whatever bullshit Waller said, and I can give you my take on interest rates and why everything is screwed going forward here.
Okay. Well, I agree with you. She is a iconoclast in this space for sure. And imagine my joy when I learned I got to work with her in February. I just learned in February, or no, actually maybe November last year. So I'm actually the winner chicken dinner here in this exchange.
I don't really do a lot of podcasts anymore. There's like a short list of people that, who invite me where I say yes. But I had to say yes to Tracy because it's just been like we've both been around for so long. So.
All right, so back to Waller. Waller says weak job market justifies rate cut in December.
Yeah, well, I think more important than that, look, I think whether they cut rates or they don't cut rates, it doesn't matter. You have Fed policy and, these 25 basis point rate cuts, even a 50 basis point rate cut, that's going to hit the economy in 12 to 18 months. There's a huge lag, just like we saw with rate hikes. We've had real rates for 2 years now. When they started to raise rates, I knew that it was a mathematical certainty that at some point the economy was going to grind to a halt, even though you could still argue that rates aren't restrictive where they are now. But let's just say they're restrictive enough. And here it's kind of taken 2.5 years because of all this excess liquidity that we had coming out of COVID to finally start to see the gears of the economy tangibly slow down. So now you're seeing the defaults and delinquencies start to rise. Now you're seeing the cockroaches come out in private credit, subprime auto, commercial real estate. And now you're starting to see the one signal that a lot of Main Street can understand other than the stock market going down, but really what that is job losses. And so you see all of these major companies out there, Meta, and I saw one of the airlines the other day, are hacking off huge portions of their employed base. And I think more important than whether or not that's going to lead to a rate cut. Because rates are coming down no matter what. They're either going to come down because these guys fuck around in a back room and decide, okay, all right, we're going to cut 25 basis points. Like, like anybody cares and like they have any clue what the price of money is, but we'll just let them have their fun. Either they'll cut for that, or what's going to happen is the economy is going to eventually crash into the wall of positive real rates, which I think we're very close to right now. You're going to have issues that we're already starting to see in things like private credit, subprime. That'll probably hit regional banks. I think I've been writing about on my Substack. And then the Fed is going to be forced to cut, because if they don't, the shit will really hit the fan. And that, I think, would be like your more dramatic, 200 basis points over the course of a month or something like that. And even that isn't going to, it's not going to save things right away. So if you look, one of the things I write about all the time on my Substack is that the market doesn't usually bottom until after the Fed has, started cutting rates. So Lehman went bankrupt after the Fed started cutting rates. So when you mind the lag, does it really matter whether or not, Chris Waller is pussyfooting around, a cut here, a cut there? A better story with job losses would be how it impacts the passive bid and, this automatic bid that continues to buy stocks on, a cap-weighted basis. That is what is driving these insane valuations and a high number of concentrated stocks in the indices, which is why you see market breadth in favor of decliners instead of advancers, but the overall S&P index going up. You see the S&P index green with 350 S&P stocks red. So I think that would be probably better to look at than, it's inconsequential really if they cut a quarter basis point in December.
And then moving over to, are you worried about this whole AI narrative not being exactly what it's portended to be? And some of the maybe accounting practices that are shady, to say the least. What are your thoughts on kind of that industry as a whole? Because it's literally keeping the market afloat right now.
Yeah, so, I worked as a professional short seller for 10 years, and CapEx fraud is like one of the most common types of accounting fraud out there. I do think it's a legitimate concern, other than like the circuitous nature of all the relationships that these AI companies have that are driving this bubble forward together. So, and at the center, you really have like the weakest link, which I wrote about yesterday, which is CoreWeave. I actually started writing about CoreWeave months ago. I think there's financial engineering going on there, which is to say nothing of their IPO, which failed to have a bid at 40, was bailed out by NVIDIA, and then all of a sudden wound up trading at 180. Like, you're not going to ever be able to convince me that bid was legitimate for the company at $180 a share. You have the circuitous nature of all these relationships, these companies that all are kind of depending on each other and have all of these agreements in place, meaning if one weak link in the chain goes, the rest of them are going to be affected. And we've already seen some of that with some of the contractual outs, I think, that OpenAI has, some of the comments that Microsoft has made where, okay, like we may consider stepping back from this, and this. I don't know off the top of my head, but I was reading about it yesterday. And so, yes, I do think that, look, I go on Twitter and I watch these like 18 to 24-year-old, God bless them, because I was one of them 20 years ago, smashing beer cans on my forehead in between placing trades where I lost 100% of my capital. But I watched these people sit there and talk shit about Jim Chanos and talk shit about Michael Burry. Like, these guys have no idea what they're talking about. Like, these are people that don't understand enterprise value versus market cap, and they want to comment on how material CapEx fraud is. CapEx fraud is, there's been whispers of CapEx fraud around data centers, especially if you listen to Jim Chanos, for years now. I've read some pretty detailed stuff on it, and it does look like a legitimate concern. The nature of capitalizing expenses is it's a fraud that is either at some point going to need the overall market to collapse to catalyze people looking back on it and saying, oh shit, you were doing this wrong the whole time. Or it's something that you need to kind of pry into deeply, to look at, okay, like what is being capitalized? Like what does the depreciation schedule for these GPUs look like? And it's such a nuanced form of accounting manipulation that it's very difficult, especially if you're, with an administration that I would say probably now has a lighter touch when it comes to regulation, that it's very difficult to put out there and make the case for an immediate re-rating in a stock, because I've seen some pretty serious reports, public reports on publicly traded companies raising concerns about capex fraud, and the stocks have really not responded at all. And so, years ago, there was a report on Equinix that I thought was, worth reading. Didn't really matter. Stock didn't trade off. Nobody wants to dig into like, all right, like what the accounting is on that. Doesn't mean the problems aren't there. It's like private credit, right? Like the marks all look great right now. Everything's marked at 100% of par right now. But like we saw a couple days ago with one of the private credit companies marks on, I think the company was Renovo. I mean, they closed Tuesday trading with a mark of 100 cents on the dollar, and they opened Wednesday with 0 cents on the dollar. And so that's how quickly these marks, especially when they're handled discretionarily, can change. And once these things start to re-rate and come back to reality, and once there is a pin that pricks the bubble, what's going to happen is everybody's going to be looking backwards. Not like us talking about it now, like, hey, there may be some trouble. Everyone will be looking backwards saying, how the fuck do we miss it? And so when you look back at 2008, or you look back at even COVID, the prevailing sentiment after the market crashed was, how could we have let AIG get 60 trillion in exposure to whatever, credit default swaps? How could we have known there were cases in China and in the US, and not known that this was going to have a profound effect on our economy and the market eventually? And so, my friend Michelle McCory would say complacency is a killer, which is why I'm, pride myself in my work in, I'm okay with the fact that I am skeptical and I'm cynical. One, I think I've earned that right through working as a short seller and seeing demonstrable, innumerable amount of frauds, many of which are still trading today. And two, the financial media is doing the exact opposite. So CNBC airs 5 days a week. They have Tom Lee on 4 days a week saying that, this is the bottom and buy. And so it's like, okay. So I don't mind being a counterbalance, because I think I've seen kind of how they make the salami, where a lot of other people haven't. And I think that guys like Michael Burry and Jim Chanos raising these concerns about capex and depreciation, like it's not just like they just woke up and decided to, talk shit about AI with no basis. Like they're not those kind of people. They're very serious investors. They understand deeply what's going on, and I think their concerns are 100% warranted. So the only question is, when is the rest of the market going to feel like that?
Yeah, Chris, we got about a minute and a half or so left. Real quickly, I just wanted to get
We just got started.
I know. I just want to get your I just want to get your opinion on
I got out of bed for this. Come on.
on Bitcoin right now. Is this just kind of a regular pullback, or is there something more ominous here with the Bitcoin?
I think, and I never ever promote my own Substack, but if you want to go onto my blog, there's a piece that I wrote. I don't even remember what the hell it's called, but hang on, I'm going to tell you real quick.
I tried to log in this morning, by the way, and I think the Cloudflare outage messed me up.
Cloudflare is all fucked up. It's called The Eye of the Shitstorm. I wrote it on November 1st. The point of that article is there's 4 spots really where I think that, I call them like the 4 horsemen of the market apocalypse here. One of which is subprime auto, like I said, commercial real estate, private credit, but then also crypto. And so I'll give you my take and then you can cut me off. But look, crypto is, whether you think Bitcoin is going to make it long term or not, you have to understand that crypto is the top of the risk on spear, right? So crypto kind of is the leading indicator, I think, into risk tolerance for the rest of the market. So, if you see Bitcoin crash tonight another 5%, you can expect tomorrow morning that tech stocks will be down 5%, or tech stocks will be down, a couple percent. Why? Because it's a brand new asset class. It arguably, still has not been adopted for any major mainstream use yet, other than a perceived store of value. And I'm long Bitcoin, by the way, too. Like, I own some, not as much as I own gold, which is my number one, but it's the tip of the risk spear in markets. And so I think markets have to go lower, at least in the short term, before the Fed stops or bails them out as a result of what's going on in private credit and just the economy in general. And I think Bitcoin will lead that. There's a lot of leverage in crypto. The crypto universe is about $4 trillion. I think Bitcoin's about half of that. If you want to be nice and assume Bitcoin and Ethereum are going to survive, you still have $1 trillion or $1.5 trillion of just pure dog shit in crypto. Things like your fart coin and your Shiba Inu and your Dogecoin, they should have never existed. They serve no purpose. And for all intents and purposes, the order book is nil and they can go to zero immediately. And I think they do need to go to zero at some point before we start to kind of find some type of bottom, even if it's a Fed engineered bottom. So I think Bitcoin will lead the way, and I wouldn't want to be, I wouldn't be in there buying the dip today, but that's just me.
I got you. All right, Chris, I really appreciate meeting you. A pleasure meeting you for sure today. Unfortunately, we're up against time.
Yeah, no
we'll
problem.
Have you on
My
again.
pleasure.
Oh, for sure.
Thank you.
For sure.
You got it. Tracy, thanks so much. It was nice to finally meet you in person. Me and Tracy, we go back. Yeah. Take care.
Thank you, Chris. Appreciate you. Man, oh man. I mean, I have 1.5 million questions for that dude.
I know he's really great. Hopefully we can have another conversation with him at some time. And he is just as real as it possibly gets. He just gives it to you straight. So I gotta love the guy.
Dude, the green hoodie threw me off for a second. Anyway, Shai, great morning, great start. Thank you. I will talk to you a little bit later on today. It is time for a tape talk. We have TTrades with us for Tape Talk. Good morning, T. How are you?
Good morning. How are you doing? I'm doing well.
Pretty good. I do want to let everybody know today's segment is sponsored by the CME Group, where risk meets opportunity. Thanks, everybody, for being here. We're going to talk about some of those great CME Group markets, man. What's on your radar screen?
Yeah, so I think we'll start out with micro Bitcoin futures, as we talked about that a little bit last week and where it went. So if we want to share my screen, we can get into it.
Let's do it. And by the way, we refer to it as the Bitcoin.
Oh, my bad. Well, let's talk about the Bitcoin.
Yeah.
So here we are, and we talked about this last week. We talked about this move lower, and then this consolidation and this move higher being fake. And then if we could put in a swing point here, which we did, seen us trade down into the 100K mark and then lower. And so since this is just a bearish expansion candle on the monthly time frame, I'm just looking for this to continue into the month end, so into December, just looking for this to continue lower. And that puts us around 87K is what I was looking for us to reach for. But, since last week, that's been a nice trend. It's just trending straight down through 100K and lower. So
yeah, I mean, Chris, if you go back to, literally, you can go back to, was it February, March this year, and you see this double bottom around 77,000. So there's definitely some targets on the downside.
Yeah, so for me, the way I approach it, I was also looking at just the Bitcoin chart here, because a lot of people use that. I'm just kind of looking at this imbalance in here as a target for this move. So that's kind of my initial target. That put me around 90 to 87K, somewhere in there. If that low here is going to hold and we're going to find some sort of low, it's going to be somewhere in here. So that's kind of what I'm looking for. Yeah. Or if we're going to fall through there, then yeah, we're going to go take out that double bottom that you were talking about.
Yeah, got it. All right. What else you got on the radar?
Not too much. That's kind of it. We can go into some euro, foreign currencies. We have a swing low that has formed on dollar here. So just looking for this to trade a bit higher into these highs to our left here, if we're going to form a low in here, which would leave us with foreign currencies with a bearish bias. So looking at that, we've taken out the previous day low, but I was just wanting to see how pound trades here. So 6B, if we can get a move lower. Was talking about this a little bit. So far, it's not quite bearish. I was looking to see if we could not form a reversal off this low and get a breakout to the downside, but it looks like we're going to stay range bound for a little bit longer here. So then we can get into gold.
Wait, hang on one sec,
Oh,
T.
yep.
Did you take a peek at a Japanese yen chart at all? I mean, the futures yen over US dollar looks a little bit like the Bitcoin
Yeah.
chart.
Yeah, so I was looking at that. The only reason it's not as interesting for me is I trade those swing points, right? And I want to be trading the day after a potential swing has formed. So this day. And then since this is already quite low, yes, I could be bearish this day. I'm just not a fan of shorting the very lows. That's where I take losses. So I prefer if we take out a low to let a new swing high form and then I can trade again. It just keeps me from, trading too low or getting caught in reversals.
Makes
So.
sense.
But gold, I'm looking for it to trade. So you can see we found a short-term low in here, looking for it to just run out these highs today. You can see we built up all these highs yesterday, which was not fun, but looking for it to run into there. And we've had that reversal off previous day high, that shift in structure. So just a move to here, and then I'll just see how we trade around this high. And it's like, you'll see with most weeks how I'm approaching it is I have a higher low I'm looking for. And then based off the reaction off of that higher and low, that's what gives me my bias. So if we just push through this high, well, then we're likely to go trade to these highs. If we form a reversal, then I'll just be looking back lower into these lows here on the left.
Yeah, I mean, I gotta point out something in gold. I mean, right now, the micro gold contract has traded 280,000 contracts already today. And we've seen these big numbers, even bigger numbers in the last couple of weeks for the micro gold contract. It's really,
Mm-hmm.
really just grown so quickly, which means it's a more liquid market. There's more participation, better pricing, all the things that happen when you get a lot of volume coming into a market. So I was really particularly, impressed. I know we're featuring it in the challenges as well. So,
Mm-hmm.
folks, there's three varieties. You've got your classic size gold contract, your micro, and your 1 ounce. That's a new one, pocket size, also to put in your arsenal to think about. Sorry for that, slowing your roll a
No,
little bit,
that's
T.
that's good. Yeah, so I mean the same thing, the micro is going to be essentially the same as the mini, but just looking for that. And then the way my model works is if we do get a nice closure today, which we don't know until the end of the day, so I don't try to really predict that. But if we get a nice closure, then that sets up my model for a continuation higher the following day as well. So mostly of interest, like I was saying, is just this high on gold. That's what I'd like to see us reach for, and then that's what I'll be watching the reaction off of.
Yeah. Okay. Sounds
So.
good. I mean, right now, though, just real quickly, though, we're
Hmm.
really right next to. So I did a anchored VWAP
Hmm.
from the 20th of October and the classic contract all the way forward here. And we're below it. We're right up against it, but we're a little below it right now. So,
Hmm.
and that in my mind, that's approximately at 40.88. So that's good. That's an important line for me.
Yeah, so for me, it's just kind of all these highs right here.
Yeah.
I don't see a reason if we're gonna reverse. I don't like it wouldn't make sense to me to reverse off this high and leave this one, and then the same for that and this. So then that's why I'm just focused on this one here, because I wouldn't trust myself to trade short off of just a sweep of this high. So that's what leads me to just watch this high here.
Roger that.
So I saw a question in chat just about going over 6E. So I was looking at 6E. The main thing is I'm currently bear or bullish on dollar. Obviously, intraday is not looking nice. We formed a reversal off the previous day high. But if I'm bullish on a dollar, right, I'm going to be looking bearish on 6E or 6B. And the weaker asset is 6B intraday. So that's why I was focusing on 6B. But it's a bit more range bound. If you want to trade 6E, I would just be looking, you know, it's always just those relevant levels. So previous day high, previous day low. Here we form a reversal off previous day low. So if we're going to go back into the range, where are we going to go to? Well, that previous high. So then, the move's kind of already made, but that's not the type of move I like to trade. I just like those continuations, but that's how you can approach reversals is trading off of that previous day high or low.
Got it. Yeah. It's funny. I wonder how many folks traded it in the Ninja Cup yesterday because it was one of
Mhm.
the eligible markets. Did you get a trade in on it?
I didn't because I was bearish on it, but it was already quite low. So when we came into the New York session here, I'm bearish, but you can see it already made most of its daily range, and we're just sitting here. So I was like, it's just going to consolidate.
Yeah.
I got chopped up in gold trying to trying to trade this lower. It just wouldn't break out, and then I went to an appointment in the afternoon and missed the breakout. So.
Got it. What else you have on your radar screen right now?
Not much. We can take a look at oil because I know
Yeah.
Delhi's long oil. I do like oil to the upside, as you've heard me talk about. We just haven't been really getting a move to the upside. We're getting a consolidation. So I do like this move higher into these previous day's highs and then looking for that. The only thing that stops me from really putting on a position here is the structure is just not very clean in here. So I like to see a sweep of a high or low to the get on side with something. And so if you look right here, we just are in this consolidation. So I don't trust myself to take a long in here and put my invalidation here. I'd have to put it down here. So I would rather be a bit patient and see if we can get a sweep of a low. Gives me a new invalidation, and then I can trade it higher. So
Yeah, it's been a tough one. I mean, Tracy's been banging the drum on this for a long period of time now, and apparently 2026 is going to be the year where some of these energy markets kind of keep moving. But this $60 price that we keep seeing, day after day after day, with a couple of exceptions, but not a lot of exceptions, just keeps popping up, which tells me that it's kind of, there's price happiness around that pivot level when I get a 60 handle versus a 59 handle. I'll look for some kind of rotations. But
yeah.
again, with my anchored VWAP, all the moving averages are just kind of tangled in love, really tight, close together, especially the 8 and the 21. It's similar to the bond trade. It seems a little bit range bound to me.
Yeah. No, it's definitely range bound. I just prefer the upside based off this swing point here. And we have a nice aggressive move lower in a V shape back up. And when I see a consolidation, that to me says continuation. It doesn't mean that it's going to just go reverse. That's generally how I approach the markets here.
Yeah.
But if we can look at anything else if you want, other than
Let's
that,
throw up.
there's,
Could we throw up a treasury bond?
yeah, what
ZB?
is it?
ZB?
ZB?
Yeah.
Sure. We can take a look. I
Yeah.
just got to go to the daily.
No worries. Take your time.
Yeah, I mean it's also in just a consolidation here, so not a fan. Does it like to leave these equal lows like that?
Well, I mean,
Not sure.
this, in my opinion, I'm biased because I was in the bond pit back when,
Mm-hmm.
we had buggies and horse whips.
Yeah.
And it's a smarter marketplace in my mind, meaning that it kind of looks in the future. It's a leading marketplace in my
Mm-hmm.
in my mind. So right now, when you have this, 116 and a half between and 117 and a half kind of range that we've been going on day after day after day, it is kind of it's price happiness. It's settled right now, right? And we have about I don't know, 61 basis point spread between the 10 and the 30-year yield right now. That's
Mm-hmm.
inching up a little bit right now. But this is telling me that, hey, until we get a clearer picture on a whole bunch of stuff, but including what the Fed is thinking, we're going to stay in this range, right? But the good thing about the market, the great thing about this market, T, is it's a $31.25 tick, and it
Mm-hmm.
trends nicely. So remember, risk reward,
Yeah.
you got to be careful. But this and I hate to use the word sister market, but the 10-year notes are great places to trade interest rates if you want to trade interest rates. And
Yeah.
that's why I always ask about the 30-year bond.
Yeah. I mean, if we had a little bit better of a sweep of this low at 116.10 here, I would definitely be pretty bullish on it to the range high. Just equal highs, equal lows. I haven't really messed with watching bonds before, so I don't really know how it trades if it likes to leave those. But I would be more favored to the upside, particularly today as we have this daily swing point, right? So you can see that with my model, just looking for this to trend higher. And if we are going to trend higher, this should close into the highs or lows or into the highs. So
When,
yeah,
when,
I would.
we got about a minute left. Explain your
Mhm.
swing point a little bit more.
Yeah, so all I look for in my strategy is just some sort of daily swing point. So a sweep of a previous low and then a close back in paired with some lower time frame structure. And that's what will print out this little green box for me. And that's just essentially where I want to see the higher time frame form its wick. So you can see it formed its wick there. And then if it just continues to trend up within my model mechanically, this would be the low I would want to hold here as long as that holds. It's a continuation up.
Okay, so your green rectangle, that represents a higher swing low off of the
That's
low.
where I anticipate the wick to form. So for instance, if we go to something like, we'll just go to Bitcoin real quick on the daily, or even here on the hourly. When we have this swing here, and I know we have like 1 minute, so we'll just be quick. If we go back here, we have this swing that formed on the daily. And so then I'm looking to sell in these gray boxes because I'm anticipating that to form the higher time frame wicks or the daily wicks to form in these boxes. That's really it.
Got it. Awesome stuff, man. TTrades, great talking to you as usual. Appreciate all your good intel. Looking forward to talking to you again soon.
Yeah. Hope you guys have a good one.
All right, it is time to trade the open with Merritt Black and Christian trading boxes. Let's do it. Good morning, gentlemen.
Morning, Jim.
Hey, Jim.
Morning, Chris.
I got to
Hey,
tell you,
Merritt.
I mean, I have respect for both of you guys, but after yesterday, uh, Merritt, your stock just went up even higher in my book. You literally posted your trades and analyzed your trades in the most detailed manner you could imagine on X in public, showing the dirty, your dirty laundry. And that to me, that's telling me that, hey, you're not hiding what you do, who you are. You're representing yourself. And when I saw that, I was like, yeah, this dude is awesome.
Thanks, Jim. Yeah, if you're going to show results when you have a really nice day and things went perfect, then it's I see it as misleading and unfair to traders trying to figure out the game because and sorry, you're going to get me started here early. A lot of traders see making it, turning the corner, CPT, all these terms, right? Starting to be able to trade well. They see it as this like unicorn fairyland where you now just kind of open a laptop on the beach and extract money every day while you sip a pina colada. It's a grind, it's really, really tough. Even once you make it, market changes, you change. It's a very, 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 very challenging endeavor, which is part of the reason why we love it. So yeah, I just feel like that's fair to people to, hey, if I'm going to show some really good sessions, let's show what a bad one looks like.
Yeah, that was super awesome. And when it's bad days are, I don't care how long you've been doing this. I've been doing this a lot longer than you guys. And when I have a bad day, I still feel bad about myself sometimes, right? It's an emotion. It's a human emotion that creeps in. It's, when you strike out, you don't feel good. And that's something that you just have to come up. You have to come up with ways to kind of, get around that, just
Mhm.
to blow through that area. And Chris, Chris, how do you feel about that? If you have a bad day, how do you shake it off?
Um, for myself, I go to the gym. I try to do something physical to get me out of my mind. I feel like when we're stuck in our mind, you're just replaying that over and over and over and over again. Obviously that's what depression is, but if you go out of your mind and into your physical, it helps you a lot. But also reviewing after you go through that, because you're no longer, that emotional attachment is probably not as strong as it was as if you would have just stayed there and just dwelled on it. And you can come back refreshed. You can take your time and actually audit yourself the way you need to versus some emotional attachment sort of blocking you from really diving into it because of the pain that you might feel, right? If you can separate yourself from that and then go ahead and audit yourself, I think it's that's what I like to do.
Yeah.
I once read something on that, Chris. And I feel like this is a truth for humanity. And I forget where it was, and I forget who said it or whatever. But
You didn't create it, that's for sure.
that's right. I created acceptance, but not this. The the concept is this like mind body connection where if between balance, like literally physically balancing, like doing some type of yoga pose, for example, or whatnot, which is I think the big application. You cannot hold at the same time strong upsetness in your mind and maintain balance. One of those two things has to go for the other one. And I just find that a really, really fascinating concept, which kind of touches upon getting out of your mind, focusing more on the body, the breath. I'm not trying to sound like a yogi this morning, but these things are true.
I got a rescue pup. I throw the tennis ball too. That's my escape right there.
Nice.
Everyone needs a dog.
I picked up oil painting during my time in New York during some stressful times, drawdowns, underperformance. I started taking some classes at the Art Students League of New York, started painting.
And Chris, we got to have some good days in the market so we could buy some of Merritt's oil paintings and hang them on the wall.
Yeah. Yeah, I think he said he'll do the NinjaTrader special.
Okay, discount. Yeah, that would be a good giveaway. Oh, we gotta talk about that, Merritt. That's got to be a 2026 giveaway right there.
A Picasso of himself.
Anyway, so before I go, real quick, what are you guys thinking about the markets today? Let's start with you, Merritt.
Ooh. I hate to say it publicly, Jim, but here we are. This is it. I'm loaded. I'm long. This is it. Here we are.
Oh, you think the low's in?
I do. Yeah. I have a combination of positions on. I have some tight stops against that 7 a.m. low. I have some where I'm not going to stop out until around 65.20s. Think of that as like some long-term, more tactical investment dollars. And I bought some out of the money calls. And so that's my book. Those are my positions. And I have no clue whether the bottom is in or not, but my charts, all I know is that I've got really, really good risk reward asymmetry here. This is the S&P, by the way. So that's it. We're in an uptrend overall. I know we're in a short-term pullback here, but the market is in an uptrend. And we're at some really good rotational spots, lower extremes on some of the more lower and intermediate timeframes. And so it's a spot that my process calls for me to have some risk on here, and that's what I've done.
Awesome. Christian, what are you thinking, man?
Hey, just a quick comment before I share my plan. Guys, and this is for the chat, guys. He's sharing his book, and let me tell you, it's sizable positions, okay? And you have to sort of appreciate that you have somebody with that kind of experience be able to put up like that, right? Not a lot of people in the content space in here are actually doing something like that, where you can put on big size, share the book, and if it's a loss, share that, right? But he knows that over 100 trades with that sort of structure, the big money is where it's at. And that's just my flowers to you, my friend, because we don't see that a lot in really when everybody's trading, these prop accounts, and that's totally normal. But real large sizing is really to be, and it's inspiring for me, and I would say maybe for all of you guys too.
Thanks, brother.
But and
but I'm short.
But
let me tell you how wrong you are and why.
That's the only nice thing I'll say to you this year.
Well, you saw me in the chat yesterday. I said Trolley Chris is my favorite Chris.
Yeah. Okay, so here's the 4 hour. Now, if I can quickly share here the daily. Whenever we finally break an uptrend, I should say the weekly. I touch a lot on the 9MA sort of the 9MA moving average because that's what I focus on. Whenever the 9MA trend ends, we move into the next moving resistance or support, which in this case will be the 20-week moving average. You can see that over time. Whenever the price gives up on this yellow moving average, we go where? To the 20 EMA on the weekly. That's the 100-day on the daily. And we're making our way there. So I think that we're still on our way there. That would be 24,200 in NQ. And then ES, it's around 20, it's around, what is it? 65.60 to 65.90. So based on that idea and based that we're in a daily 9MA downtrend in as the internal structure instead of that weekly pullback, right? We're in a weekly pullback, but that is a internal daily 9MA downtrend to that possible support. Can we put in a low here in reverse? Sure, but I have a target in mind that we are moving into. So with that in mind, we are breaking. Yesterday, we were in the beginning of the sort of competition. We were in this wedge consolidation structure, and then towards the later half of the day, we broke lower. We attempted to bounce overnight. We failed, and then we finally tagged prior week low in NQ, and we're consolidating now. Is this the first? Now, another internal structure, right? Is this the first lower low, lower high of the 4-hour downtrend that can then lead to a new lower low into that main area of support? Or can we eventually reclaim that after reclaiming the 9MA? So as long as we're still below the 4-hour 9MA moving average, I have to be a little bit on the seller side until they prove that we are able to reclaim. That would be around the 6690, 6700 area in ES. If we can reclaim that, we can see higher. Now, for the morning plan, that's just my higher time frame view.
Hey, Chris, real quick before you get to your morning plan, I'm gonna dip into the chat here.
Cool.
Wish you guys both the best of luck. And where were you guys 30 years ago, 25 years ago, when I really needed you? But great stuff, you guys. I will be in the chat, and good luck.
I'm not alive. I was not alive. So, all right. So let me finish this.
Floating around in some huevos, man.
Shab, that's the only nice thing he'll hear from me, okay?
Hey, by the way, I agree. So my position is, I understand, a little bit aggressive. I think for me, a stabilization above like 66.80, so almost to your kind of 90, is where it starts to be much more confirmed.
Yeah,
I agree with that for sure.
All right, let me share my plan here. We're in this hourly wedge in both ES and NQ. You can see that the hourly 9MA downtrend has already provided 3 lower lows, lower highs. So that confirmed the end of this initial drop from yesterday. Now we're consolidating to create a new hourly trend. If we can reclaim the prior week low in ES, we can see a push up into 6690, 6700, which is what we'll need to find acceptance in order to move up higher. If we fail to do that, and we give up on the 6640s. By the way, we've already tested that area 3 times. So to me, that's a little bit more vulnerable. If we fail to hold there, then we can trigger the move lower into 6590s, which will be my main sort of target, and then lower into 6560s if we do not hold. For NQ, similar structure. We are holding prior week low. We've sort of tested the 640s area 3 times already. If we cannot bounce and reclaim, first of all, 800, but then 860 is this overnight high, then we'll move back down to new lows. And if that does not trigger a failed breakdown again into the prior week low, then we can see a push into 24,500. If that gives out, then we will see that move. I think we can see a move into 24,200 to test that larger, higher time frame support. But if we do reclaim 800, 860s, then we can bounce up to 960s, which is a strong resistance, and I'll look to short that. But yeah, I am kind of leaning on the bearish side, my friend. So, but I'm rooting for you always. Fuck, that's the second nice thing I said to you.
Dang it. No, I don't. I won't mind a little lower. Obviously, I'd love for it to go higher here, but it's just one trade.
I know, that's what people forget.
Yep. I think a little bit lower is even more ideal, which is why I've put some of those dollars to work in that more of a wider stop, drive packs crazy type of trade.
Yeah. But there's always big money. I mean, that April bottom, that was a big that reversal. That Sunday, Monday, oof, that was a big day. And I know that was a big day for you too.
It was. Chad asked about gold. My main thesis, like the clearest idea I had yesterday into the arena was short gold, to get down to like, 39.98, which is literally what it did in the overnight session to the tick. I caught a little bit of the gold short yesterday in the afternoon, but it was too little, too late for all my other losses. So where does that leave us with gold? The overnight low is in that general vicinity, from 39.96 to 39.65 is a substantial line in the sand bullish spot. In fact, it's a similar situation to equities, right? Big uptrend on the daily bars, and getting rotational on some of the more intermediate time frames, and then bouncing off those extremes. So far, gold is really bouncing off those extremes, unlike the S&P so far. So now where does that leave us? Well, we've got this next inflection. I would keep my eye on 4080s, 4080 to 4090, that kind of zone. And if we can start to hold above there, 4150s, 4200, that type of thing. That would be my take. So you got one line in the sand within an overall fairly bullish context. 4080s is your line in the sand. And then if you get a hold above there, acceptance, then you can look for those upside targets. That's my take. I'll keep an eye on that as we trade here today. We are getting close to that zone right there, right there.
I like it when you do it right there.
A little chingy. Is that the same guy that did what was it called, Holiday Inn?
Yeah.
That takes me
Holiday
back, man.
Inn.
Class of 05.
At the Holiday Inn. Classic. Those are classic songs. Which version of Chris do you like best? The nice one, the troll, the combination of both? Oh, it's the combination of both people like.
All right, I got to clear the air. AQ's bringing it up. Merritt, please explain this tweet that you made. Volume profile is entirely worthless, end quote. So, guys, that day, I think ICT or something had come out with like saying volume profile was no good. And then like the whole profiling world went nuts. It was just me kidding. It was just me like joking around. There's literally profiles on the banner of my X bio profile page. Yeah, it was just me being facetious, and it was insane. I'm not like a, like a crap poster on X. That's not my thing. And that was kind of one of the rare times where I've done something like that, and it was wild to me, the lack of understood sarcasm of the post. It's funny.
Morning, chat. Salma, morning. Killer job yesterday. Morning, everybody.
Morning. Congrats to Salma. Well done. Chris, you anything on your radar stalking wise? Are you looking for any kind of like pops to short or anything like that in Q?
Yes. I mean, I have if we get to 960s, that's like a level for me to absolutely look for a short. But I do like the 860s area as well. I just if we break out of this hourly contraction that we're into the upside, just wondering if we'll have a lot of strength to only wait for 960s versus 860s. But I just think we're so close to that main area of support that I think we go tag it.
Some of the pre-market crew, Tracy and the gang got me interested in dusting off an old market internals analysis. You ever look at any of that as someone who's, focused on equity indices? Have you ever gone down that rabbit hole of
You
really
mean
going
like
deep
market
in
breadth?
internals?
Breadth, as in the internals of
Different
the
breadth
overall.
measurements, tick,
Yeah.
all of those things.
Yes, on breadth measurements, not on tick. I feel like that's only for futures, no?
I mean, it's an index, right? So of the
Right,
S&P,
yeah.
it's looking at the full basket of upticks versus downticks at any given moment.
Yeah.
And then you can look at a cumulative tick. You can look at things with up volume versus down volume. You can look with things that are up or down, right? That's been one of the things like people have pointed out lately, where you've had like a huge number of stocks in the S&P that are down on the day, but you've got like, essentially Mag 7 going up or something, right?
Oh yeah, it's the new lows, new highs. It's called. I mean, I there's an indicator called NASI indicator, and that provides the cumulative total on the chart for you.
Mm-hmm. Yeah. Yeah, I've got a chart book with all that stuff on it. I haven't used it in years, but I've pulled it up just to keep track of it. Maybe I'll comment on it today as we go.
You know, it's a good one. NCFD. I mean, this is only on TradingView that I can find it, but it's the 5-day. It's the Nasdaq's 5-day average. Whenever it gets
5-day
to
average,
this,
what?
The stocks, like the 5-day average of whether they've reached an extension or a move to the downside.
Oh, of the 5-day range?
Of the past 5 days.
Yeah. I like that.
And so whenever we're typically in an uptrend and we go to that oversold reading, that's typically where the indices bounce. So I like to combine that and have an idea that the overall market sort of seen a maybe aggressive or just a normal pullback, but it's now on a short-term basis oversold. And then maybe ES, thank you, is coming into support. That helps me with swings a little bit. That's where I really put on swings in an uptrend, just buying those pullbacks and then riding the move back up. That's a good indicator that I like.
Nice. What about sentiment?
I don't really focus on that because the sentiment may be price will continue to go higher even with the negative sentiment. Eventually it'll break, but I have not found that to be reliable in swing trading.
Yeah, I mean, I think the way to use it is the opposite, right? It's you only need to be worried about the market going higher when the sentiment gets ridiculously bullish, right? Fading the crowd.
Yes, but I think on the future side you can get away with that. You know, if you focus because you can manage risk differently, but if you focus too much on that, like
it's not a precise timing tool, that's for sure.
Yeah. It's just I have found that it's tough to sort of rely on that because you'll still have the leaders like Nvidia or all these big companies continue to go higher while that sentiment is really high, and then for the indices it does pull back because it's a index of it's a basket of stocks, but then some of the leaders help it not go back. Like when we see ES and a lot of people complain that the market's just so choppy sideways and it continues higher. Well, that's what we're seeing is some of the stocks are going lower, but the heavily weighted stocks continue to go higher, and people shorting the ES or the NQ fail to recognize that, and they just keep going through stops when again, we drift up higher. And
Yeah.
it's a little bit more on the swing trading side that I don't show here.
Here's one of the more popular, this AAII is a big one that a lot of people follow. So it looks like for this past week, looks like we're due an update tomorrow, I suppose, if I'm doing the math right there. But we went the most bullish we've been since at least this short, I bet this is premium. If I bet I won't be able to. Oh no. So 49, we touched that in September 10th.
Looks like we might get some chop here into the open. Oh, or maybe not. Maybe we drop here. 5-minute wedge breaking.
Yeah, it certainly looks like it wants to run these stops below this 55 in the S&P.
Just broke this wedge. Let's see if we can bounce to create a lower high and now look for a short. Since I am looking for downside today.
Bobby Bobson, you've just got to wait for there to be some uniqueness between the VWAP periods as they reset and new months, new weeks, things like that. Whenever they're kind of within a day or two of using the same data, right? Like a month starts and then that was on the month started on a Friday, right? And then you have your weekly that starts on a Monday, right? So there's only 1 day of difference between the new month VWAP and the new week VWAP. They're not, you don't want to look at those two things and be like, oh, look, confluence. Let's trade based on confluence. They're kind of the same thing, right? They're mostly the same thing. So wait for them to kind of become unique in terms of the time period, the data that goes into them. Merritt, could you explain how you utilize the large blue bands to educate your decision-making process? Daniel, absolutely. The main thing I'm focused on is so look, there's VWAP in the middle, and then we have +1 and -1 standard deviations, and then I have +2 and -2 standard deviations. So the main thing I'm focused on is what in NADRO we refer to as our developing value area, which is the area between the plus and -1, right? So when we are mostly trading inside of that area, the way it educates my decision making is that for this time frame, I might have all kinds of bullish or bearish context going on, but for this time frame, I'm generally looking to play mean reversion from the edges of this area, not precisely, not to the tick, just a general guide back towards the middle. And so if I combine that, for example, like with my trade I've put on here this morning, I'm long from this region here because I have a bullish contextual view, and I used this DVA framework to buy a lower extreme. We call that an extreme fade setup. If the market is holding outside of that DVA area, as it was yesterday, and one of the trades I took in the arena was this short right here. You can see my algo firing off short signals. That's because we started to hold outside of that -1 standard deviation. We got a nice pullback to it. Sellers showed up. And, that's what we call an imbalance pullback. So It's a framework to tell me whether we're range bound or trending is the short of it. That's the short answer. All right, we're about to open. And whoever was hammering the all caps questions, I'll get to you in a little bit after the open.
So far before the open, we have this internal breakdown, and looking to see if it leads slower or if it creates a failed breakdown and we get a bounce. We have 10 seconds here. Good luck, everybody.
A little interaction with yesterday's low here. Could be a quick tell on the session.
Yeah, if we reclaim that.
Yeah. It feels heavy, but I'm also loaded to the gills long, so things are gonna feel threatening to me more than normal. So that's part of my internal dialogue, is telling myself to stay objective. But yeah, it looks like sellers are pressing pretty good.
Yeah, it wants to break. 15-minute wedge breakdown, hourly, attempting the wedge breakdown here. Rejected at the hourly 9MA. Unable to reclaim prior day low on the initial test.
Mm-hmm.
So now I'll be looking for a potential higher low, not higher low, lower high, if there's an opportunity to get in, to wait for a structure. If not, it'll go down without me. And then see how we react. Maybe we push to prior week low and NQ. By the way, on these swings that you put on, do you focus mostly on ES or NQ?
Mostly ES these days. They're pretty interchangeable. Occasionally you'll see kind of one in a better, more confluent spot than the other. But they're pretty interchangeable for the most part.
Cool. Look at that. Nice back and forth here at the open.
The guy in the chat, the last, and thank you for your time, sir, reminds me of my favorite movie, The Big Lebowski. And a good day to you, sir. All right. Well, my net worth just changed.
Look at that. Look at that. Well, don't forget I supported you, so.
Of course.
All right, so buyers clearly in control here. We have broken out of that hourly wedge and we're into first resistance. Let's see how we hold up here. We need to really hold this 800, 840s area. Yeah, I'm saying even up to the overnight high. For ES, main resistance for me is, well, the fact that if we're able to reclaim prior week low, that would be pretty big. but it would be 66.90s. If we can reclaim that and hold that, then that'll give me a better, more confirmation that buyers do want to have sustainable move higher.
This is it. As I mentioned before, it was 66.80 for me. So that was the test there.
Yeah, can see that. But so far, we're still we've been in a range for what, 8 hours now, between 66.40s and 66.80s, and then for NQ 6.40s to 8.40s. So the real move won't happen until we leave this range. And that's something like
We are certainly whipping around.
6.40, so something like this.
If you wanted to get short today, that was the spot up there for Nadro folks. Got the weekly IPB there. Still lower targets into 6,600 on the yearly.
So here's our range in NQ. And as a trend follower, I typically want to capture the move away from that range. And here it can be a lot of mean reversion, which we're pretty much seeing on an ultra micro time frame. So it's the move away from this consolidation that will generate a sustainable move. And then for ES, that is 66.40s to 66.80s. Just some negotiation here so far. No real setup for me as we ping pong back and forth.
Let's see what the internals are doing, man. Cumulative tick holding positive. That's about all we could say right now. Obviously, it was a gap down, so your advanced decline is starting low, but we'll see what it does.
We do have NVIDIA earnings, which the market might want to push up for it. We have that tomorrow, which means later today or tomorrow can be really choppy as we wait for that. Biggest stock in America. Mags look good. A little bit green. Semis are a little bit green. Software is green. All sectors are green. Banks, industrials. So it's so far as being supported. And a lot of these ETFs have seen a big gap down and they're trying to bounce. So we can build structure a little bit up here, then we can really get that move going up to get a bounce in the markets. That was the fourth test of 66.40s in ES. Are there quad bottoms? Is that a thing? I know there's double bottoms.
Octobottom.
Octobottom?
Is that an octobottom? Those are rare. You don't see a lot of those.
Octobots, roll out. That is right, Mr. Market. But the anticipation is what might create choppy conditions leading into it. So far, an internal higher low here on the 2-minute. Balance is sort of being supported here for both ES and NQ.
Yeah, I hate to say it, but I think if we can't get through 66.75, then we could just so easily go to 66.20, 6600.
So the internal higher low is looking to break here in NQ. ES is still holding here, right in the middle of the range that we're in. So this is really where you pick your, I mean, if you want to pick your direction, right, higher or lower from right here, where we're perfectly balanced.
One little teaching point is, if you notice, a lot of my commentary uh, is around not confirmation of my book, but threats to my book. And that's the way my psychology tends to work, or at least my developed psychology after many years of pain. Um, it's important for you guys to understand where you tend to go to when you have a position on. Do you tend to ignore conflicting information, or do you tend to hyperfixate on anything that might scare you and cause you to maybe be too jumpy or scratch too many trades? Kind of understand your own tendencies, I think, is a really good thing for developing traders to start to understand. And I think it's journaling and whatnot in real time and understanding your thoughts and your own patterns is how you get there.
The internal higher low here failed. You have your higher high, higher low, it failed. So now back to the bottom of the range. And if we can consolidate a bit or create a little acceptance micro here, then maybe that can give me a way to manage risk on the downside. But so far, a lot of back and forth. NQ's heavier.
I hate the fact that my position is public. I hate it so much. It makes me have all kinds of additional internal conflicts.
Take it easy on the day trading side then.
I am. I actually, I thought a minute ago, I was like, oh, I haven't even traded this day trade account.
Yeah, when I have larger swing size, I just stop trading this account and focus on that. All right, so NQ into this London low area, overnight low. Can we create a lower high here? And then set up a structure here to join? Might not give it.
You've certainly got the lower edge of this if you connect kind of a trend line off of the lows since the overnight low. That's, to me, that's the main inflection point of this market right now. So whether that cracks and holds or cracks and head fakes, but it's certainly looking like, in general, since the overnight low, a bear flag at this point.
See if we can reject here at the 9 MA. That'll be a change of character. If we reclaim this 9 MA, which is around 720s, 728, then we'll just go back to the other side of the range that we're in. But if we
What
can
a
reject
whippy
it,
market, though.
yeah, if we can reject it, then that'll be a change in character. Whenever you're in a range and from a price structure perspective, the internal structure that you want to see to have a understanding that it's going to be ready to break out one way or another is when it stops going back and forth like this. And then eventually what it'll do is it'll either create a higher low and then bounce. And that's telling you that buyers are stepping in from down here. Oh, this drawing went away. To up here. So now apply it to the downside. If instead of bouncing back up, we reject at the 9 MA and do a little bit of consolidation here, that's telling you that sellers are moving from up here to down here. It's a good way to wait to have a little bit more data to say, okay, the internal structure is telling you that there's a change in character. We're no longer ping-ponging back and forth. And now one party is showing their face or their card. What is that saying in poker?
Poker face?
No.
Tipping your hand?
Yeah. So we're rejecting from the 9 MA here. And I'd like to join here on the downside and then essentially have a stop right above that lower high. But I need to wait and see if the next candle can close below it. Or the aggressive trade was just short that bounce, but it's let's see if we can bounce up a little bit. Yeah, look at that. No real consolidation here. It was a move lower, bounce, reject it. But again, that little micro review that I shared happened here. You have a change in character. You reject it instead of reclaiming it. So that's telling you that the sellers are still in the most immediate time frame here. They are moving lower from the highs, and they're looking for lower prices. And then the hourly wedge is also looking to break lower after a failed breakout. I do want to take a short. All right, we're bouncing back up to create maybe another lower high. The Qs are so close to prior week low.
I'm
I'll
coming
try
out of a
short
lot of
here,
stuff here.
and I'll put my stop right above this candle, and I'll just be super tight with this and see if we can drop.
As soon as we couldn't bounce from here and started to come back into this region here, I came out of the majority of the shorter term stop
Okay.
position that I was in from here to pretty much scratch on it. We'll stock re-entry. Like I was saying, this is the breakdown of the general. If you were to draw a trend line across the bottom of this, it's the breakdown of that bear flag. So the bears have it for now. Delta pressing lower.
All right, so I put this short on a little bit aggressive, and I have a tight stop here for, let's see, what was my entry? Can't see it, 639. Looking to see if we have continuation lower. We did have that change in structure that I highlighted. We have a lower low, lower high, failed to reclaim it, and then we bounced a little bit, and I took a short on that bounce. But we're still, trying to flirt with these lows and possible bounce from here. If we can't bounce, then I think we can see a move lower. And this is an aggressive entry, a way for me to possibly participate in that initial breakdown instead of waiting for the wedge structure that I wait for. And I only went with that idea because of the hourly wedge that's breaking. We can see a pretty fast move lower. That's down to 1R here. Let's see if we can get some off at 1.5R. To 1R.
Target filled.
Okay, I'm out half at 1.3R.
Nice.
And then I'll just look to write this and then see if we do go to that main target that I'm looking for. And then while this sort of plays out here, my idea is, again, this is not really my directional short setup where I look for a wedge and then a breakdown, because that will create a sustainable move lower. So this is my way to enter in the initial breakdown. I took half off at 1.3R to finance my risk on this aggressive idea while I wait for my ideal setup, right? So this is, and then we'll see if it works. But I'm still going to be waiting for my directional setup here to put on more size and have a traditional trade. Is someone talking? You guys not hear me?
Loud and clear.
Oh, a Fed speaker. Merritt's like, a little too much. So look, guys, the ideal short for, on my aggressive side would have been this bounce here to create the lower high and then rejection. That's the aggressive sort of short that I look to take. But I waited a bit because we still we're testing prior week low. But that's the ideal way to manage a sort of aggressive trade like that for my approach. This is a 2-minute time frame. And then I'll leave the stop where it is. If it stops me out, I'll make, I don't know, 0.3R or no less than that. But as I continue, again, I'm just waiting for my setup here, right? So the next target in this scenario plan that I shared with you guys, let me share that again here. Here is the hourly, or let me go to the hourly here on ES. But if you guys remember, we were consolidating in a wedge structure here, and we're breaking out of that. The bounce that we had in the morning was a failed breakout of this wedge, and now we're moving lower to target. So my next target in NQ is this 500 area. If we fail to bounce, then I do think we come down to that 24,200, which I highlighted was the weekly 20 EMA, the daily 100 EMA, and we typically find support when the weekly 9 EMA trend ended, and it's ended. And all we've seen so far of the last 2 weeks is a move lower towards that area. So I want to align my intraday trades towards that main target.
Ooh, this market's in a good spot.
For what? A long or short?
For long.
I'm with you. I do think we're gonna see that 24,200 or ES that 6590s, 6560, 6590s. I'll be looking to buy that with you.
Mm.
Voice of an angel. I doubt it. Maybe it's all the ESL I took.
All right. I reloaded some. I'll just put some arrows on the chart today.
You're in shorts, yacht.
I stopped out of the second attempt there. What'd you say, Chris?
I was talking to somebody in the chat. Tracy says, slew of data incoming. So we have some maybe some 10 a.m. news here in a bit. Let's see what happens. Okay, a new update here for us on the 4 hour for my process. The overnight consolidation ended up being a 4 hour lower low, lower high. And what we're seeing now is the continuation of that 4 hour 9 MA downtrend. If you guys remember from my morning planning, I said I cannot be bullish until we reclaim the 4 hour 9 MA. And all this consolidation was a bounce into it. We created the lower high. This is scenario, this green scenario, and now we're rejecting lower. So ideally, this is a strong continuation of this 4 hour 9 MA downtrend into main targets. If not, we can bounce again. But the 4 hour trend is confirming everything so far. And what is left to do now is this is a aggressive 2 minute 9 MA downtrend that we're in. When it ends, we want to see a wedge form, and then maybe that gives us a directional setup for that big drop. Oh, something's going on with my swing account. I can't place a trade.
All right, so for me, guys, three short-term versions of my bullish thesis to be put on haven't worked out. Obviously, the sellers are in control of the tape. I had a little bit of an order flow signal for there momentarily to kind of pick some spots in this region, but now sellers are once again firmly in control of the tape. So I'll go into a little bit more of a hands-off, well, a lot more of a hands-off mode here versus picking super short-term little momentum shifts as I have been there, and wait for something more substantial to get some kind of confirmation, right? There, as much as I try to pick bottoms and tops and whatnot as a part of what I do, there is a reasonable cutoff point to that where you can't just keep trying the same thing over and over and over.
In this situation,
And just to clarify, there's only a handful of times each year where there's this much opportunity for me. Just to put it into context, this is not just a normal trading day for me. This is maybe 5 days a year that are this good.
Okay, I'm out more at 4R,
Let's go. Nice trade, man.
and I will just continue to trail the rest into 24,200s, which is my main target. But look, guys, in this moment, my aggressiveness paid out. There has been times on stream where I get a little bit aggressive and it doesn't play out, right? Um, but again, and being aggressive when when you bend the rules after you know them for so long, over time, you guys don't see it because we don't stream every day, but over time, it's a big benefit to us. And if I wasn't aggressive, I would not be in a trade here because my directional setup is a wedge, right? I need a wedge contraction to allow me to manage risk on a directional move. So because I was aggressive today, I had a better understanding of the overall action, right? I did a walkthrough of this sort of range action and then the changing character here when we created a lower high. And then the fact that we were breaking an hourly wedge. So my aggressiveness was backed by an understanding of what was happening and going back to the probabilities question or comment on what the probability was that we could continue lower, or else I'd be in cash, right? And you have to be okay with missing a move if you don't have a way to manage risk. You can't just be entering back and forth. But I'll just sit in this for the rest of the day. Chris, where are we going for ES reversal? I can see a ES reversal at 65.93, 6,600, 65.93, and we just hit what, 66.02. So maybe this we're in this 2-minute downtrend now, lower low, lower high, lower low. Maybe it ends now and it creates a wedge, which is great, right? I want price to bounce to give me another opportunity. Now, that was a good partial right there, right at the low of that before that bounce.
Mm-hmm. So now this is where I'm super nervous. I stopped chasing the short-term shifts. And so now I'm at the mercy, of this thing just not going up. Oh, I'm focused. Don't you worry about me.
Don't you worry about him.
What you got, sellers?
I'm patient, guys. It's part of the strategy, right? It's not that I am patient, I guess, but the way I designed the strategy is to let the market do the heavy lifting and participate in trends. When I know day trading is not a lot of that. It's a lot of shorter moves. But I don't want to day trade. Do I fight
What Chris is saying is just, it's one of the biggest points that retail traders need to hear. They think that like everything that you do as a trader is and always will be this game of like willpower, right? Like you want to do this bad thing, but you're telling yourself, oh, don't do this bad thing. And that's what good trading is. No, good trading becomes something much better than that, guys. You can rise above that. And it's based around developing a process and taking your licks in the market and getting beat up enough to understand, no, I understand what I want to do, and that's what I want to do, right? That's what Chris is saying. He doesn't have to be patient to trade his process.
Yeah. I'm just trading it. All right, so this is our first big bounce. Let's see if we can now form a wedge. You have your swing low down here. We're bouncing now to seek a swing high. And then maybe we wedge up like this. And then from there, we have a more directional setup or idea. Unless we, I would say if we can reclaim the breakdown at 640s for NQ and then 6640s for ES, then we know now, again, now there's a new change in character and buyers are buying this low here. But we do have divergences on the 4-hour, but I still think we can see lower.
There's the spot right there for the intraday downtrend. Nice
Yeah,
little up thrust wick through that little cluster on the S&P. Sellers responding. That's a good short.
Yeah, it looks like that was also the 5-minute 9MA for those who watch my process. So we're on the 5-minute, we've put in our low and lower high, which looks a little bit like this.
Why not take the short Merritt right there, right? That's a classic imbalance pullback like we walked through at pre-market when someone was asking about that. I'm so focused on the big picture here today that, and I've made this mistake many, many times, where I get involved with the shorter term stuff. I get a little sucked in. I start to say, yeah, let me just kind of do this here and this there and make a little bit on some shorter term setup. The opportunity cost of that for me historically has been too high. So while that is a short that I typically would be all over, for me, the context and what I'm trying to do today, I'm going to avoid opportunity cost, if that makes sense.
Big opportunity cost. Chris, if this wedge gives you what you would use as an entry short, would you add to your existing position? Sometimes I do add to my trades. And what I should be doing is looking at the swing account, but I can't make a trade in my swing account. I don't know why. I have to look into that. All right, yes. What?
IB?
Yeah.
Maybe Cloudflare affecting them?
Maybe. But yeah, I do like to add, but I treat that as a separate thing. Oh, and speaking of this, what do you feel about, let's say right now, I have this entry at 639 in NQ. I add to it. What I typically do, and then, please correct me. I want to know what you think. If I do add on a trade,
I took another shot.
I will close the ad, and I'll keep my original position. But now my cost basis has moved. What I do is I keep my stop at the same place as if my entry was still above there, even though my cost basis is now moved lower significantly. What do you think about that?
I was unable to fully process everything you said as I was re-entering some trades there. So you're keeping a stop somewhere. Could you say it again?
Yeah, if I add to a trade, and now my cost basis went from my short today, let's say at 639 to 550s, and I close out my ad for profit, but now my cost basis, it remains at 550s. What I do is I keep my stop at the same place of the original trade, because to me, that's where the invalidation takes place. And then the remaining of that trade will now show a negative loss up all the way up into that stop.
Well, that's just accounting. Yeah.
Right. Okay. So you don't move your stop either.
Well, first off, so two things. When I add to trades, they have their own independent stop. That's how I do it. I try to time the ad actually as if it was a brand new position. And
I get it.
no, I'm just kind of making sure my execution stuff is ready to go if I need to come out of some of this. So it has an independent stop. It's treated as its own kind of thing. And then secondly, in terms of accounting, and I'm a big fan of when and where you can do this. Most platforms don't let you do it, but LIFO, right? Last in, first out.
Yeah.
So what happens if you have LIFO is you get the ad and maybe you scale the ad and scratch the ad. That theoretical, that average position price that you're in, it goes back to those original entries, which is kind of
I
the
love
way it
that.
should be in a sense, right?
I don't think IB does that. Let's see.
They'll do it for like tax purposes if you want. There's a setting, but they don't do it, I think, in platform for advertise. But it's in the settings for tax purposes.
All right, so we are forming a little micro wedge here, as you guys can see, and it's looking to break lower. For both ES and NQ. And so we like that, right? So if you don't have a trade, I mean, I'm not telling you to buy or sell, not at all. But this is my setup where I would look to add. But I kind of want to stay in it and not add, because I'd rather wait for a stronger consolidation, more time in a consolidation, which means I'll probably wait for a 5-minute one, and I'll just stay in this trade. Nice breakdown there. Pretty extended now. I'm looking at QQQ and SPY. Pretty extended here from yesterday's drop. Why I'm a little hesitant on adding here, and why I'd rather wait for a 5-minute consolidation, because this can easily fail here. You know what I do? I kind of want to short here ES and then have a very tight stop. No, I'd rather wait for a higher time frame. see, what time is it? 7:19. NQ is flirting with a failed breakdown from that wedge. Let's see if we can reclaim this lower high here. Yes, a little bit weaker. We have this lower low, lower high, lower low, lower high. And if we reject, we know we're making new lows. If we reclaim the 9 MA, we know we are seeing a failed breakdown of that and can set up a bounce. Why I was hesitant on adding to my short, because I'd rather wait for a longer. Look at that. See, so we're triggering a failed breakdown in NQ here. Now we just need follow through. But the first lower low, lower high from this breakdown attempt failed, did not produce a new low. That triggered a 2-minute 9 MA reversal back up. And now at this point, my short is can actually, it's vulnerable. Like we're seeing a failed breakdown here. So now this can generate a move all the way back up. Same for ES. So it's really fascinating to watch price unfold and know what is happening in real time when you remove your emotions out of, right? And we talked about this last week. If you're focused too much on the money and the emotions from it, you rob yourself of the opportunity to learn from what you need to learn. And we're only able to walk you through things is because we've been able to do that. So now you have this failed breakdown. And when I said my short was vulnerable, it's, price is now moving up towards my stop. So I'm going to move my stop.
I got it this time, Chris. This is it.
Yeah.
That may be the best decision I made all day, guys, was to take just a little bit of heat on this last entry rather than keeping a tight stop. We'll see.
I want it for you. I gotta stop saying nice things. All right, so I'm with my stop to entry here. So I don't, the rest of my trade can get stopped out if we move up. So let's see if there's follow through here on the move. Again, I did share that on the 4-hour, we do have some divergences showing up. On the hourly, we have the first lower low, lower high. So let me share the hourly here while we wait to see what happens with price. On the hourly, we're seeing scenario 2, which is a break lower. So we have our first lower low and we're bouncing now to create a lower high. Do we reject and continue scenario 2? Or do we create a failed breakdown and then reclaim? We have to reclaim 6640s, right? Because that was the prior range. If we can do that, then maybe price can traverse back to the other side of the prior range, 6680s. And that would be really big for Merritt. For NQ, if we can reclaim prior week low, 640s, that would be pretty big. And then scenario 2 would be invalidated. And now we can push back up to 840s, 880s, right? In that area. If we put in a lower high against this hourly wedge breakdown, then we can continue lower. So it's just a wait and see now to see what happens. But really good failed breakdown here. Chris, your targets are based on how much risk. You don't see your risk based on how far a target is. No, my targets are based on market structure, but I'll manage the trade based on risk. And this is just for day trading. I don't really, for swings, I manage that differently. For day trades, because there's so many opportunities during the week, I'll just take half off around 1.3, 1.6 R, and then I'll ride the rest with targets based on market structure. How many years have I been trading? 15 years. But it took me a bit longer to become consistent.
Little quinceañera, man.
Quinceañera. I mean, it's the education out there today. I feel like it's much better than before.
Absolutely. Obviously, there's a ton of slop. Like, yeah, there's issues, but whew, I was telling somebody the other day, like, my goodness, do you know what I would have given
Yeah.
to be in a Discord with someone like me, or you know what I mean? I'm not trying to blow smoke here, but just an established trader and be able to like actually ask them a question in semi real time and get I mean,
Yeah.
that used to not exist, guys. Used to get on old Big Mike's forum and try to figure it out.
Yeah, you just
Forex Factory.
I mean, now you have people who are, beating these prop accounts and then withdrawing money within a year, maybe of trading, maybe 2 years, maybe sooner. But also, futures wasn't that big back then. This is like 2010. It was mostly options. My first trade was a call and then silver. Made $1,500, and I was, my monthly income was like $2,500.
We've arrived.
And then I lost 15 grand for that following year.
Oh yeah. Oh yeah.
Why did it take me longer? Well, one, I lived on my own when I was very young, so I didn't have the opportunity to really just chill at home and learn. I had to work. I was in college. I had two
Takes
jobs.
everyone longer, by the way, guys.
Yeah. I had two jobs. I had school full time. And so couldn't be as committed as some of you guys are able to. Money was a big issue. I didn't have money. So to save up $1,500 for an account and then lose that over the next month and then save up again.
I've been there.
And plus, you learn all the wrong things in the beginning.
Just FYI for those following along with my attempts here today and getting into this position. Again, I think this is educational for you, but right here at this price, across a handful of accounts, not counting the options. The options are down, but the short-term, loading up longs that I've been doing across multiple accounts is break even right here with this open P&L. Just FYI. So it's not like I'm losing my butt here, digging into some kind of hole that I nothing like that. I'm taking some really good tactical spots here and there, and so far it hasn't worked out.
It took me 5 years, Pillar, of losing money year after year. I know, I look young, guys, but it's because of an illness that, took over when I was young. I sort of stopped growing. When you have an illness as a child, you don't mature like everybody else. Your growth is limited because your body's is focused on keeping you alive instead
Keeping
of
the organs going.
Yeah.
Yeah.
And I had an organ that was failing.
Yep.
So You sort of, you don't grow, you don't get older.
Benjamin boxes. That's good.
That's funny.
That's a good one.
Look, I'll look
Curious
good when
case of
I'm
Benjamin
50.
boxes.
Yeah, if I can keep this face and with a little bit of gray hair in the future.
Pretty suave. Que
Yeah.
guapo.
Guapo. All right, so we're rejecting at the 5-minute 20 EMA, 15-minute 9 EMA. So this is typically where we see a lower high against a breakdown, and we're seeing that now. Who will win here? Do we create some sort of higher low now against the low? Right. Remember, we triggered a failed breakdown, so technically that's starting a new uptrend on this internal 2-minute time frame. Can we now create a higher low and then blast off higher? Or that's what Merritt wants to see. Or do we fail this potential higher low and then resume lower? Unfortunately, that's what I want to see. But actually, I don't. I want to get stopped out. For you, stop me out,
Don't say
please.
that.
Let's
Don't say that.
whoever they is, come for my stop.
Yes, I'm long from the last arrow on the chart.
Is it a good thing to look younger? In the industry that Mary and I started off as, it's not, because nobody will trust, you. Who will give money to a young 20-year-old when you're in the 50s?
My best friend is a dentist, and he started to go gray when we were in college. And by the time he was out of dental school, he had the most credible, like if people would go to him as a dentist, they literally thought he was like 58, but he was like fresh out of dental school. And it gave him just tremendous credibility. Very, very successful.
That's awesome.
Yeah.
Yeah, nobody trusted me. Like, who's this 20-year-old? Who's this brown 20-year-old? It's gonna rob me. I'm not gonna give him any money. It's very tough, guys, to be brown and young in the industry. You gotta want it, right? Oh, look at that. I like that. That's good for you.
Root for your position, man. Get off of mine.
No, there's always another. This is a day trade. There'll be more.
But you see, that's what makes markets go up is when you have people like rooting for it. I need you to root for it to go down, right?
Oh,
I need you to be
screw
like
Merritt.
the counter.
Bring it down.
Yeah.
Um, if this is just your 10th 50K account pillar, I would say, I mean, I might be wrong here, but I would say that's still not a lot. Like, that means he just started trading recently. If it's only, I mean, I guess it sounds bad if if someone says, oh, I bought 10 prop accounts, but at the same time, this takes a while to learn. To me, that's not a lot. That's maybe like $1,000, $2,000 investment.
Oh my goodness, absolutely.
and that
Well,
and that it
when
was
I was coming up the curve, we didn't even have micros, man. You had
yeah.
to really sling around some cash, you know. It was rough.
Yeah, and that afforded, what 10 accounts afford you what, maybe 20, $30,000 for a $2,000 investment. I mean,
Yeah,
that's
it's
it's
a
so good right now.
great stepping stone tool for sure.
That's why I had to work 2 jobs so I can make extra money to put into my trading account. You're on your 400th. Okay, maybe we got to talk about that one. Something going on there. Yeah, 10 over 2 days. I mean, when you find yourself in that, you have to just stop and trade like a complete demo account because you're not learning what you need to learn to go through 10 accounts in 2 days. All you're doing is trading your emotions back to back. Your sizing may be an issue. Oh, I totally forgot I was looking for a short in ES.
Someone was asking about my view on gold, just real quick. I went through it earlier if you rewind in the stream, but this is the line in the sand right here. So far rejected at it.
All right, so we rejected where we needed to the 5-minute 20 EMA, 15-minute 9 EMA, where we can create a lower high. The internal structure is obviously we had that failed breakdown that I highlighted that created a move back up, but all it did was it failed eventually. We consolidated and now we're breaking lower. I was looking to short ES. I completely forgot it. But I will keep trailing this NQ short, and then I will look to see if there's an entry for ES for me to take. But I will hold these runners into my main target if we can get there. Chris, I have my first prop account. What is the best way to link it to my Ninja and Tradeify? I don't know. That's a Ninja question. No, I'm sure they have it in one of their blogs.
Starting to look like a similar situation where we were after the open, where it starts to feel like in general, the attempted pullback off the current low of day feels like a bear flag again, right? Buyers unable to do much. If we were to throw up a volume profile on this, which by the way I am a proponent of, despite my tweet, we would see a big balance in this region. And now we are forming a second balance in this region. See if we can test my work there. Order flow volume profile from here to here. Look at there. So it looks like, could I have improved my drawing? Yes. On the top one, I would change this to be like right here, right into that LVN pocket. And on the upper one, there's actually a good bit more volume, a little bit higher. So I'd kind of push it up into this region. There is an LVN in this space here. I'm really not interested in that. There's so much crisscrossing through that area. It's not a good one. So there you go.
I just noticed that that bounce in NQ was a bounce into prior week low. Didn't exactly hit it, maybe what, a couple points below it, but that's what we needed to reclaim. It couldn't. The ES bounce was to backtest the overnight lows. Last night's low, well, on the Pacific time, 2 a.m. Eastern, we backtested that and rejected. So, and now we're just chopping around. We're consolidating here. We had a pretty big move from yesterday, and we're consolidating for the next leg here. So let's see if ES, I kind of like ES short here for a continuation. Don't like that it's super extended now from yesterday's drop. I'm gonna move this here.
Yeah, the volume profile I used is a stock. I believe you have to have the order flow plus package turned on, but then you can just draw that volume profile or whatnot like I did.
Drive, maybe you missed it. I'll say it again. I'm looking for price to go NQ to the 24,200 area and then ES 60. Well, we're so close to it now. It was 65.90s, but I have 65.60s as well. It's the weekly 20 EMA, which is what I'm targeting. Such a larger time frame, right? When we're talking about day trading here, but I do focus on multi time frame structure.
Merritt, could you explain when a low volume node is a support and when it shoots through it? What you're asking is for me to tell you what the future is. An LVN is support or resistance. We literally never know and can never know when it will hold and when it will shoot through. But we can know that there is tangible market structure, right? An edge of a balance area, aka an LVN, at an area that you can lean on to do what? To define risk, to define perhaps a directional view, right, against that area. That's what we use it for. Then what's the point of a low volume node at all when it can go up or down? Man, I don't know how to help you on this one. Any tool you can use, statistics, a full-on quantitative, whatever, some moving average or some indicator level or a price action pattern or a candle pattern or a momentum shift or an LVN or TT's model or whatever.
Yeah.
None of it you can ever know what's going to happen next. So you can't say, well, what's the point? That is the key thing for the beginner trader to move from what can I find and use to be able to predict the future, which is bullcrap, no one can, to what can I find and lean on to help me make a good, structured, probabilistic decision and when and where to place some risk, hopefully setting it up in a way where the risk reward is skewed in your favor. And then, quite frankly, you're flipping a coin from there. You're flipping a coin. I assume I'm going to get stopped out of the rest of this, or this position. The sellers are just not that strong, though. I hate that price is drifting lower. But it certainly is flaggy. I assume they'll come get me here.
Time for a short in ES for a new break lower. I'm watching this little tight contraction here. If we start to break lower, I'll put on a short.
I love it. I think if we drop kind of 66.12 or something, or 66.11 in the S&P, you get certainly a little burst of momentum.
Yeah. We're consolidating for a move. So, but again, you're right. Sellers are just not.
They're just not. I mean, even now, since I've made that comment, the buyers are just pressing really hard. You see the delta, continuing to lift higher on this sub pane on my charts here ever since we put in low of day. These moves that the sellers have done to bring us all the way back down near lows, there's just not a ton of aggressive selling behind it. Does that mean that we can't go lower? Then what's the point of using delta at all? No, it doesn't. But these are the tools I've chosen and prefer. But yeah, I'd be willing to bet here that the low of day is not in, even though I have literal bets the opposite of that. That's trading for you right there, is when you would rather place a bet against your own trades at a certain time, but you keep your trades. Can I get some credit default swaps on my longs here? Some long default swaps? Looking big picture, guys, if the S&P is able to break and sustain below this area, if we start to get and hold below 65.50s, that could be a lot of fun. As much as I'm would love to nail a swing long for the short-term traders, the uptrend for the year starting to fail, puts yearly VWAP on the table, 6,200, right? Like that. Those are fun times. So we are right on the precipice of that, which, by the way, is why I'm getting long. Crudele talks about this all the time. Where can you put on positions where you are the absolute closest as possible to your stop out point? So for me, that's what I'm doing here. Oh, this low doesn't stand a chance, man. Go ahead and bang into it. Hit it. Hit it. Here it is. Hit it.
Gonna bounce right up when I get in.
No, they're about to slam it. Here it comes. Oh, wait, that was different.
What?
Just super. I'm just commenting on super short-term movement here. They were right at the moment of just flushing 10 points in the S&P, and all of a sudden it was a weird little mini short squeeze.
So we have two 15-minute inside candles. We're contracting for a move here. If we do break lower, I'm going to have a tight stop in this ES. Look at that. It's just flirting.
Something's
Okay,
wrong
let's
with
see if we
these.
can break.
Something's wrong with these sellers, man. I'm telling you.
Where's the volume?
Exactly. What's going on?
Let's get a flush.
The yellow zones are the main volume profile based balance area for today's session that I was just using as a teaching point.
Okay, let's get a flush now.
I got stopped out on the fourth attempt long.
So we need a new 2-minute 90-minute downtrend from this wedge breakdown. We need follow through lower. So we need a lower low, lower high, and then continuation lower, or else we can trigger a felt breakdown and bounce right back up. Let's see if we can push down. Yeah, it's so odd, this price action.
It's just lost like
It's like it's a
energy.
holiday.
Relative volume is declining. It's still above average, but it is declining.
So do not want to see a failed breakdown here, which might happen. Maybe that's a sign of what's to come, right? If we don't break lower, then that's telling that we're going to be reversing. Let's see how we do into this bounce. If not, I'll take a stop here. We need to reject from here and push back down, or else we'll be triggering a failed breakdown. Which looks like it. All right, we have our lower high here. It's very, can't see a lot here. Lower low, lower high, and then you reject lower. If not, it'll be a failed breakdown, and then I'll take a stop. And I'll just remain in the NQ short that I have and continue to track that. Once we close this 2-minute candle, I'll bring my stop down a little bit more above this potential lower high. But if we blast off, then yeah, the breakdown won't take place. And we're so close to the targets here. Maybe it won't happen. We have 30 seconds here. All right, good. Let's see if we can continue lower. So what we wanted to see and what so far is happening, we have a breakdown, right? We have our low, and then we're bouncing to create a lower high. If this lower high can remain in place, then we can see a continuation lower to new lows. If we reclaim the lower high, then at that point, we know that it'll be a confirmation will be taking place, and I'll move my stop. A confirmation of a failed breakdown will be taking place. And so my stop goes above that lower high, because when that lower high is reclaimed, we trigger the failed breakdown, and then I should no longer be in the short. So let's see if we can have some follow through now. but it's just still, you know, a lot of back and forth here. I'm showing my ES chart, Gene. You don't see it? It's right here on the left.
Yeah, we see it. 9:37. Yeah, almost 20 minutes of pretty severe back and forth in this region. One thing to pay attention to, guys, is for your time frame where you have some clean price action versus where it gets super choppy and back and forth. A lot of bar to bar overlap, as we call it. Makes you need to apply some different tactics, whether that be wider stops, more aggressive entries at edges of chop, things like that. You can adjust tactics.
All right, no luck in the ES short. That triggered a failed breakdown. We'll remain with NQ with a stop at break even on the runners. And I'll just wait for later in the day if we do set up again for a short side. But I can't be bullish until we reclaim 6640s in ES and then 640s in NQ. As we can still be consolidating for a move lower. Chris, the other day you said something about the higher high, higher low structure and vice versa being a 4-hour. A classical 9MA consolidation across all time frames, and I'll say this fast, like in a higher high, higher low. This is typically a 4 to 6 candle consolidation in a 9MA uptrend or a 9MA downtrend, right? If it's to the downside, it's the same thing. If we have a consolidation where it's a 8 to 12 candle consolidation around the 9MA, and you can look at that at the 5-minute ES and NQ on what day? That on Friday, last Friday after the big reversal when we consolidated, the 5-minute had a 8 candle consolidation along a rising 9MA. That's the more complex sort of structure where I call it a 9MA no trend in time, because is what that's telling you is that it's creating energy for a more sustainable move lower. And you see a perfect example of that on Friday. So you can go back and review that.
Morning.
Hey,
Yo,
morning,
guys.
What's up?
What's up?
We got me picking bottoms, losing. We got Chris crushing the shorts from the top.
I think XY and I both tried to pick this bottom on NQ
Man,
here.
I'm licking my chops at a swing long in the S&P. Let me tell you, I will continue to be picking some bottoms.
I still have half my size on the long on NQ.
I was only in 2 and I got out of 1. And I'm at break even at this point, so trade's paid for.
Yeah,
Nice.
I'm thinking about putting it break even, but
Nick, that was fun watching you battle it out, going for it yesterday.
Oh, that was wild. Do you think about ways you could have done better or managed it? But it's a very different game when you're literally
Yes.
actually competing against somebody else and trying to have some edge there.
Yep.
As the markets are heading into like market on close, like there's no edge. I'm just literally pressing buttons at that point, trying to be correct.
Yeah. For sure.
Looks like it still went slower.
yeah, I'm out of my longs, break even on the half of my position. I actually thought it was about to be a super banger trade right there.
It looks
It looked
like
like
bear
it.
flag into the open, drop, and now another bear flag.
Yeah,
Just
very
kind of a
weak.
mushy low. I'm looking at the S&P. It's kind of mushy. We'll see though.
I have this as a marked area, so I will keep attempting longs if they don't flush it, but I think we're gonna break IB pretty soon. Trade the 420s and see what they do from there. It's a pretty wide one too. It's a 400-point IB, so
That open was wild how back and forth large range it was doing. That was
that's a
it's
break
fun.
even.
Fun times.
Yeah. All right, guys. I'm out of here.
Yeah, Chris, enjoyed it as always, brother.
Yeah, you
Chat.
guys enjoy
Take
the
care.
rest. Yeah, Merritt, good stuff today. Thank you for teaching us a little bit something. And then you guys, good luck making
Yeah, good luck,
XY.
Nick.
Thanks,
XY.
Thanks,
guys.
guys.
See y'all.
All right, guys, take care.
Oh, I can share there. Oh, they just got my break even stop there. So that's less fun.
You long NQ or yes?
I was long both, but they tagged me on both.
Oh, you
But
have longs.
I got some cash
Bottom
off,
take
so
longs.
let me share.
So gold might still bid this. Gold and NQ are in areas of interest for me, so I'm definitely keeping an eye on this. So for
And they
gold, I'm
took
looking
me
at
out.
this right here, LVN. There was an attempt. They built the volume coming out of this spot yesterday, and it's a possible higher hold here back into this range. It's going to be a bit tricky. We got NQ still trying to figure out its feelings. Good morning, chat.
Yeah, good morning, guys. This has been a fun one, huh?
400 point IB. About to crack it. Get it done with. ES is done.
There it goes.
The market is up. I tell you, friends. Thank you. Thank you for the market call. I'll take that into consideration. Hey, but our longs were really running for a second, huh?
Yeah, I could have managed better.
Did you take anything off? We had like
Yeah, I got one off.
60 points.
But it looked real promising there for a minute.
Well, the range is so big today that I was holding the original 6 and I was like, oh no, I think this can run. I'm going to hold it. And then I looked at the numbers. I was like, wait, we're already 50 points in on this. So I was like, all right, I'm going to take off half. And in my mind, I was like, and the other half, I'm going to get like 150 points on it. And then the dream died.
Of course. It's the way
But
it
this
usually
is
works.
some good range. See if
Yeah,
this
it's been
failed move. What indicator volume profiles besides prices to the right? It's a leg-to-leg delta. So it just tracks delta. I have it to reset every 50 points for NQ right now, rotation. So if price rotates back up 50 points, it will reset this leg. Everything's flushing.
mm-hmm.
If you turn your screen upside down, they're going straight up. Good morning, Cooper. Sir, the markets are not up. Yep. Dude, chat is so funny, man. It cracks me up. Man, dude. Good morning, man. What's up? Thanks for tuning in, Marcos. All right, so I don't know about these.
Do I dare try this again? No.
Thank you. I'm gonna wait for them to hold
Yeah.
back in
Like,
IB, but
I'd
gold is
like
at
to
the
see them.
open and VWAP, so that is interesting.
Yeah, I was watching that 80s spot and I just couldn't do it because something about like the weakness we were seeing and potentially going to continue to see off the open in equities. I'm just like, maybe is it a terrible idea to look for shorts in gold? Just like, are we going to have a repeat of last week where we just ripped 3% on a random day?
So you almost top ticked the short, is what you're
Yeah.
saying.
Well, it's that same spot we were talking about yesterday when we were doing the
Mhm.
competition, like that 80s to 85s
Yeah.
kind of area. So I was just eyeballing it, but something about the overnight and just the Cloudflare thing and then the Home Depot earnings. I'm just like, I don't think I would want to short a flight to safety asset at this point. Like it just didn't seem like the morning to kind of do it when we bounced off 4,000 basically. It just kind of came right back up. But I don't know. Maybe I was wrong.
Well, technically you were right, and then you were wrong.
Yes. Which is usually the case.
I'm trying to see if gold can sustain something. You're trying that rebid on NQ.
Yeah, we just rejected off the IB there, and yes. Oh, I guess pretty much NQ did the same.
I'm keeping an eye on this. I think we might actually just re-offer this. They are really building down here. Don't want to get an offer this far away from the 9, though. So I'll wait. I will be patient on that.
Yeah, I was
See what
running.
gold's up to. I missed my
ran-
entry on gold, so I only have one lot on right now.
I wanted to reoffer up towards the 600s because we have the lovely V range up there as well as the overnight low. And I was not at my desk when the 2 attempts were made to potentially short up there. And it looked just from a LVN perspective, just like a simple take the stab.
Mm-hmm.
Just was not here. Chat, how have you all been trading this violence to the downside again?
I have 5 years experience. I know market good. I believe you, man. I believe you.
I mean, maybe we can get a push back up here to like 460s and potentially
The tape is
there.
it's building pretty nice down here. If they can leave this behind, then it might mean something. But
well, it seems like the long the euro close trade has worked several times the last
I think I'm
week
actually
plus.
gonna see if we can get a reoffer closer to maybe the 80s here.
Wow.
See what they
That
do.
is
It's a
an
nice bid, though.
FU little push there by buyers back into IB. So anyone shorting in the hole there.
Yeah, I'm gonna
Oops.
look to see if they offer this, and if they can't really get much of a continuation on a pullback, these are gonna be really good longs. Or I'm just gonna hit the short if they struggle to push through this volume here.
And yes, I mean, buyers really need to push us back above 6620, which is pretty much 6600 in the old SPX before I'd probably really say I feel safe about longing or continuing to try to long this versus looking for a reoffer. I think they're going to do it.
This is nice candle here.
Yep.
But I'm gonna look at these 80s and see what's up. For me, it's if it's a decent stab, I'll take the short, and if it doesn't work out, we've got longs for a good amount of time going forward. But they're definitely getting ran through, so
If it doesn't work, you just blame sellers like I usually do. Are you off your jet lag? Are you feeling good? Refreshed, normal again?
I'm a lot better than I thought I would be because I slept on the entire flight back. So landing around like 3 p.m. here, it wasn't too bad. I didn't feel too tired, but yeah, there was still jet lag here and there. There was one night where I was finally falling asleep at 1. This is Pacific. And then I woke up at like 1:30. I don't know what happened, and I couldn't sleep till 5, and it was so strange. But that's about it. I've been pretty all right. I mean, they threw me into streams the day right after.
Right.
I had that morning stream and then the one with PAX after, so that kind of kept things or just put me back in the mode pretty quickly.
Did you fly business or did you take like an Ambien and just pass out and
Oh,
coach?
it's gotta be business. I cannot sleep
I couldn't imagine
Otherwise,
doing like a transcontinental flight with not having at least something that actually reclines.
yeah, it's got to be business. It's expensive. It's expensive, but hey, I work hard, you know.
Exactly.
But yeah, without it, I can't sleep. That's the issue. I think if I could sleep on flights, like I got some friends that just they're out. They could sleep anywhere. If that were the case, I would never pay to upgrade. But
Yeah. I can't
yeah,
sleep either
I
on
can't sleep
planes.
on flights. I actually hate flying
Same.
because you feel like you're just stuck there. It's so you're so bored. So I gotta try to sleep, and I'll pay the money to sleep.
We still pushing here. So here's a spot I was looking for to potentially see if sellers reoffer the 6620s
Hmm.
NES.
It's a chance. So I'm thinking I do still want to try to see if they can give a reoffer somewhere. And the worst case scenario, ideally, would be if they get stuck in the 50s, which is still 50 points down, and then you can kind of flip along if they struggle. But I still want to see the sellers actually gain some ground for once. Right now, there's buying in the 15s and 16s that I'm looking at. If they can't get through it, then try reoffer. But they're just chewing through any offer that's out there right now.
Mm-hmm.
This gold long is working, one lot. Let's do it. Didn't pay attention to gold, so I couldn't add anything here, but let's see what NQ does.
And they're pushing now. Wow. That's the move that you and I were looking for the first time. Well, still kind of fighting it.
Oh, my bad.
I was gonna say, were you talking?
Yeah, I'm saying if they reject the volume here, we don't trade back in the 20s, I might try the shorts. We'll see. Gonna give them a chance. A lot of selling just came in down there that didn't get what they wanted.
Mm-mm.
So it's probably a decent long spot too, but a bit too high for me.
Like to see, if they keep pushing 6640s in ES, 39s, 40s. That would be,
Yeah.
is that the overnight low? Am I crazy? No, it was a little below that.
I think from this point, if they're gonna continue, take a take a stab at the 590s for buyers, come back around this area, and I'll try to get a bid in this low volume spot if they can keep it a low volume spot. But yeah, they did get some pretty big selling 510s and under that got
Oh
stuck
boy.
just now.
I think Barkin is still talking.
Look at my little one lot gold. I will probably try to take an even 1,000 on it and call that gold trade done.
H bailout. So Nick, XYZ, you trade to build up your trading account or just treat it as an income maker and lifestyle achiever. So this is something new that I am doing. Currently, I am not trading props at all. And that's pretty much what I use to make a lot of money for a long time. I am purely trading my cash account. So I've gotten to the point where I feel like I can pay myself out of it in some capacity to kind of just maintain my lifestyle. I wouldn't say grow it, because I am trying to actually grow my cash account for the first time. Historically, like I would keep it anywhere between 20 to 50K and I'm paying myself constantly out of it. So now I'm actually trying to really build a balance for once.
Yeah, mine is income maker. It's a big enough account to just be that way. It's not to say that. So how mine was is it was funded through prop. I think without prop, I wouldn't be where I am now for sure. I'm gonna try to start to scale into some shorts. If this thing keeps running, I won't be able to get more size on it.
Yeah, they
We'll
give
see.
you
But
that
yeah,
chance.
my cash account is funded by largely by prop money. So I'm grateful for props. That's for sure. I did a lot of learning on them without having to use my own money. And when I did use my own money before props really became a thing, yeah, I was just giving away mad tuition. So I'm definitely grateful. Try to see if they can even sustain the selling here. Slowly scaling. If it goes too far up, I'm just gonna peel this off. So my gold long is done. Took the profits on that. Looking at NQ shorts. But yeah, Nick, you quit prop, huh?
For the time being. Well, I mean, I still have a live account with one firm that won't be named that is currently locked and in jail. So outside of that,
Still.
yeah, I just haven't cared to go through evals and things and just go through the whole process. Like I've been done it for years. I'm just kind of over the churn and burn that can occur with them at times. But
Mhm.
you never know. I'll see how I feel in January. But for the rest of the year, I have no intention of really trading props.
Yeah, it's a pain in the ass, man.
Well, it's like I've had some very good days with this kind of uptick in volatility over the last couple weeks. And then you think like I have to like bust my ass for a month to get a payout worth set amount. And it's not worth it to me because I don't like I can fund my own account. Like
Mhm.
there's no need for me to continue to just mentally build things from zero, I guess. I think I'm a little just mental capital is spent doing that over the last couple years at times.
A lot. A lot of it too.
Because you got to follow rules, like there's consistency in some of them, and you just have to you have to trade to get a payout in theory, and
Yeah, it's like
it's
benchmark
not.
trading
Yeah,
versus like a real consistent process. And it gets to your head too. It gets pretty difficult. So I'm just trying to see if this selling can really push. If not, I'm just gonna flatten this thing too. Giving them a shot here. Still got a lot of bid. Yep. I think I'm gonna take the longs instead.
dang.
Yeah. This was that pivotal spot where it's either gonna rip or it's not. There's no room to add. ES tape is really strong here. I can give them a bit more time on the longs. If not, I'm getting out of it too.
I think they're gonna push. It looks a little better in yes.
Yeah, ES is like really buying. I'm doing this off of the ES tape.
I mean, we could definitely go back up to 40s and reoffer there violently, but
Mm.
I think this is pretty constructive.
Yeah, I just flipped it when it came back on my shorts. But we'll see where this goes.
Those jerks.
This was either we trade down to the bottom of this node or the top of this node, and it was the decision spot. So the shorts aren't working. You gotta get the longs. I'm gonna tighten this stop here.
Market rises only, check history. Just with some all-time stats there on the Mag 7.
ES is still
Yeah.
buying. They look a little stuck.
Back to the V range here in ES.
Sorry, chat. I'm locked in on the Dom right now. I'll get to you guys in a second. I just want to get some profits off. Only 3 lots on this because I was coming off of a short flip. But we're getting paid, so
It's a nice looking low of the day. Yeah, it's very
I'm
possible.
flattening that. I'm gonna take my 2,500, whatever that was.
Nice
If
trade.
I were long from lower, I would hold the trade for longer, but my point of access there with that flip was, hey, we're getting to the bottom of this node or the top, and it's gonna happen from here. And if I'm like right in the middle of this between the two, I'm taking all my money there because the position isn't that great. It's a momentum play. I'm sure people in the chat are gonna have questions about that. Let's see. What did I close gold? I only had 1 lot, so yeah, I was looking at NQ, so I got distracted. I had my 1. I could have added more in this range. And next thing I know, it's already running off. I didn't want to add higher, so I got my 10, is it what, 10 points on the gold and just took that 1 lot off. I didn't want to just sit in it. I didn't want to give back much of what I had so far. I had a really good NQ long over here that paid pretty well until it took took half my position, but it still paid pretty well. So I'm just trying to stack the P&L right now. I'm not trying to see.
I'm actually going to try a reoffer here.
How often
I don't like
do I
the
flip
direction.
from shorts to long? Often. But it has to be in the right spot. It has to be. So if anyone's seen the playbook, I do talk a lot about um, having to be in a decision spot where the market is going to
I hate my entry.
make a choice. If it's in that spot and one side doesn't work, I'm gonna take the other side. A lot of times in those cases, I can't really get the size I want because of where I am. Like I said earlier, my longs were around here in the 30s, but if I was in like the 10s, I could have been able to hold it longer because it's a better point of access. With a point of access here, there is a pretty high chance of a retest and then a rebid. So I'm happy to take it off, take all that money. I mean, it was a good move. 30 points, maybe more. I don't know, whatever. I had 2,500 floating P&L, so didn't like the access enough to want to hold that for a pullback. But that's the game, man. I mean, my idea, like I was saying the whole time, was we're getting to the low part of this node or we're getting to the high spot. And this is where they're going to make that choice. And to me, the choice was made when the shorts stopped working. I mean, I had like 1,000 floating P&L on the short too. But the play wasn't to just grab the P&L. The play was to get to the bottom of this node or the top of this node. And we took advantage of the opportunity there.
There's a push.
Yeah, the short, they were still in like potential short territory there. So sucks that didn't work. I'm not even in the long anymore, so. Nice going, Jacob. What size do I trade? How many micros? I trade minis, and the size depends on my risk. So I don't trade based off of contract size. It's dollar risk. That's why you see when I'm in a trade, it's not points like everyone else. I have a dollar value assigned from the entry so that I can clearly see what is at risk on my trade. Um, on the low end, it'd be 1,000. On the upper end, it's like 2,000 risk. I have to really like the trade for me to want to risk 2,000. But sometimes it's 3 lots. Sometimes it's 8 lots. You guys would see me go up to 10, 11 when it was slower, right? I can have a tighter stop. But it's all the same dollar price. It really the contract size might be different, but the cost, I call it the ticket cost in the playbook, is largely the same.
Nice little push.
VWAP then. Gold's still running. Yeah, these are good locations for both gold and NQ for the longs. I should have been paying more attention to gold right here. Could have got this pretty good rebid. I think I made enough for this morning though.
Come on.
I'm all right with that. Yeah, I'm probably done. This has been a really good fast morning for me, guys. So I'm not gonna take any more trades. Where can you go to learn from me? Paintingthetape.net. Or go to my Twitter. It's literally linked on my profile on my Twitter. XYZ trades with 3 E's. And you can click on the link and it'll take you right to my playbook. And that's everything I know for free. I can't look at my P&L or it messes with me. Yeah, everyone will always tell you, don't look at your P&L, don't trade your P&L, which is true. But I found that I can just never listen to that and I'm always going to look. So I found my way around it. That's just one of the things. Strengths and weaknesses. It was not my strength for sure. So yeah, I have my P&L. I'm always conscious of the P&L. It makes me very risk conscious, which is a good thing. The reason I play with very tight stops is because if I get in enough drawdown, there's gonna be this window for like hopium to come in, and I'm like, oh, no, it's cool. Maybe I'll just add some more here or this or that. Like, no, I gotta cut it. So I gotta take the kind of like how Pax says it, you're right or you're right out, because it can get really dicey for me if I don't get right out personally. So another weakness that I've dealt with, that I found my way around. Man, that gold long in hindsight now is, if I just had one more lot.
The everything long.
Yeah, actually, yeah. Even VWAP first tap back can't hold the selling or can't hold the buying. They're definitely trying to sell it right now, and they're not getting what they want. Look at this delta. So NQ's putting in like extremely positive delta, and ES is showing me all the selling. That's probably gonna get ran through now. ES does have stuck selling
Oh, yeah.
from the 52s down to the 47s. They are not happy. 45s. So if it pulls back, can look for the 45s to hold. And if they start trading below 45s, 47s, then It's possibly a VWAP hold for NQ. I don't know. It's hard to want to short above 35's ES, to honestly. A lot of volume that they just ran through. Anything above 35's is bullish.
I mean, it was so bearish 30 minutes ago.
I know.
It was
Well, it's like
over.
you say, right? It's the sellers doing the thing again.
Yep. They just find a way to leave you high and dry every single time.
Always tripping on their
Never
shoelaces. They
trust
need
them.
Velcro strap shoes, man.
Never trust them.
When I started trading, I was almost a perfect trader, lost almost every time. Yeah, I think that's normal. For me, I even had this, I'm sure everyone's gone through it, right? Where you're just losing all the time. You're in constant drawdowns. So you're like, maybe I should just actually fade myself. That's going to be the thing. But it never works either. So you're just like losing both ways.
They're still buying this. Hmm. Well, hope we don't now just chop around here just below the opening range.
That was like the last opportunity for a long, unfortunately. So, do I regret peeling it all off there for the profits? No, I don't, because so many times, I honestly think more often than it doesn't, it's those kinds of moves will come back and test it again. And this was still a spot that could be offered back down. So it just didn't happen that way today. Other days it will happen, and I'll be glad I peeled it off, but you stay consistent. If there is a stand up for traders, you'll be awesome in there. I appreciate that.
What do I
Is
have the
this going
opening
to be
range at?
each of your best year yet? Jeff, every year has been my best year because I size up. It's not, I think my favorite year is still 2022. The landslide downwards. That for sure was my favorite year. I mean, we had like 200 RVOL on some days.
I think it is, but we'll see how the year ends.
Oh yeah, Nick's been crushing it this year. You guys actually have no idea how much money this guy makes.
And how much
Nick's
money
the
I can
sleeper.
lose too.
He's a sleeper, but I'm gonna expose him every time.
I also do have some larger losing days. Like
Yeah, but
people
those
on
aren't real.
X. I don't always share those with my friends. They're not proud of those days.
Someone said nice air for a quick short. Honestly, ES is my canary today. And I don't know, man. If they're getting this kind of trade above the 635s, yes, it's definitely not bearish. They are getting to the open, which can certainly reoffer, but I think they'll catch that offer. They'll catch it on a bid if they come back to the 30s.
Yeah, if we're gonna do it, I would like to see it here quickly. But maybe this is it.
Good morning, Jose. Thank you. Yeah, so Jeff, you had a great 2022 as well, huh? It was awesome. Some days you can just wake up and you're just like, "Huh, I'm gonna sell this," and then you're done. My April, I think it was February to April of this year was really nice too. It was
Mhm.
given 2022 for sure. I had to use like 30-point stops. It was kind of crazy.
My proud moment was just not doing a lot of stupid things in like July when things just slow down, everyone's on vacation and the tape just kind of levitates.
Oh, and
In
then
years,
we're on in the afternoon and it's a 10-point range.
yeah, in years past, like I would just start forcing sides in that and just having large losing days when I really just should not be trading that much during that month. It's just not my tape.
Yeah, I think I was trading like eight, 8 to 10, 7 to 10 lots during that volatility, and I got DMs like afterwards, even recently as now, like, hey, how come you don't trade like 8 lots anymore? And I'm like, well, have you seen the market?
Hmm.
I'm gonna have like 4K risk.
Yeah. People don't, I know we continue to grow this channel and like trade the close and stuff, but if you guys weren't watching us in March and April when this thing kind of started and the volatility that was Liberation Day, like we were trading micros, guys,
Dude, yes, in
because that's how insane it
February to
was.
April, I was trading micros. It was insane. I was just legging in like 6 micros at a time because I that was too crazy. It's all dependent on risk, guys. I think 4 lots to me is like the new 7. 5 is like 10. I can't do anything more than that with this kind of range. But it doesn't matter because if range is expanded, it doesn't matter if you're smaller size. It's the move is going to be bigger anyway. So how long been trading? How long consistency? 2020 started trading. Consistency probably mid 2021. Well, I was already profitable, I would say within 7 months, but not consistently. And a large part of it was because of prop. If I didn't have that, like I said earlier, I don't know if I would have stayed in the game, honestly. Early on, it was tough, right? I got really lucky to find the OFL group before they created OFL. So I was able to learn a lot of stuff. So that's a lucky moment. I mean, life is a lot of lucky moments, right? But props really helped me stay alive for sure. If I was just constantly risking my own capital, I probably would have just been like, you know what? I don't think this is it.
Hmm. Sellers are in trouble, guys.
Yeah. If anyone has a volume profile on ES today, you can see where it built, right? The whole time, the 30s, and then into the 05s, 09s. And then when they finally crack lower like NQ, both of them built that volume node, which is effort. It is indicative of effort. Lost it, and if ES is gonna just leave that entire volume range in the morning behind, it's a get out of the way moment for sure. We do have a double-barreled doji forming. We are 60 points from the 90 MA, so we could retrace this thing quite a bit here. But I'm gonna keep my hands off. No more trades for now. I'll be back in the afternoon. Yeah, Jeff, it is kind of like this. It's the same idea as the dead body, right? And it's just like it's just left behind down there at this point. Two dojis though on the 5 minute. I think they will bring this down. They are quite a ways from the 9, both ES and NQ. So they'll, if they had the juice, they'll retest it, and they're probably gonna bid it. If I'm being honest, the 1 hour candle that's about to close is a very substantial candle. The prior 2 bars on the 15 minute, quite substantial. Half of the day's range is a tail now on the daily, so. Seven months in and not profitable. I think that's a pretty normal thing. That's a very normal thing, honestly. It takes years for sure. And for me, it was like every year that I thought I knew enough. The following year, I learned so much that I realized I knew nothing. And then the next one is the same thing. And the next one is the same thing. You're just like, you're gonna keep learning and developing until you finally, you know, settle on these things work for me and these things don't. But the only way to do it is to just keep trying stuff. That's where prop really came in handy for me. I was able to try a million different things. That's why anyone that's seen the playbook, it's a lot of random stuff, right? It's not all price action. It's not all order flow. It's not all this or some. I've got squiggly lines. I've got candles. I've got order flow. Like I took the stuff that worked for me and I kept it, threw everything else out.
And the rest is proprietary.
And the rest, sometimes I show it off. I mean, anyone who's seen my magnet indicator, my special $ magnet, maybe one of these days. Full gluten, it's possible. It's possible.
I don't know. I don't love how we're just consolidating here.
Yeah. I mean, they might triple doji candle this thing. Get my paywall started. I would, but I'm too lazy, honestly. I've got other things I gotta do. Like I say, like I'm candid with you guys. If I had something to charge for, I'd charge you guys, right? For whatever it would be, but it requires me to actually make something of it, and I don't want to do that. So
Yeah, it's just too much work.
for now, it's free. It's just, and I don't believe in charging for education because there's nothing new under the sun. So that's why the playbook is free. All that stuff is free.
I got to keep working on the next segment of mine. But yeah, at least those are somewhat out now.
Nick's stuff is mega proprietary, guys. That's
It's
why he's
just
a sleeper. He
abbreviated.
just shows up and makes money and goes back into the shadows.
Pretty much. Yeah,
How do
I
you
mean,
catch your bad days before they get too large? At some point, you do have to consider, like, let's just say, for example, you are a 3-lot trader and you're trading 3-lot micro and you're down 300 bucks, right? You do have to consider that you are down a cumulative 50 points per lot. If you can have given 50 points to the market, it's it's both of these things actually. It's you cannot read today's action and you shouldn't try to force that. And the other one is just the market, maybe it's just not working with you. It's not cooperating with your system, with your edge. And anyone of sound mind outside looking in is going to say, just stop. There's going to be another day, not too long from now. And that's kind of how I get to if I'm just like totally getting washed, it's already going to settle in my mind that like, hey, you know what? First of all, this isn't enjoyable. Second of all, I can't get anything done today, so I'm not going to try to force anything to be done today. And you just kind of settle into that mindset. I think a lot of it too is like, I've been I go to Vegas often, where I'm with my boys down at the casino, and if it gets to a point where I'm just not winning, I'm not interested anymore. I'm just like, this is not even enjoyable. I don't want to do this anymore. Get real salty about it. So the markets, they give me the same vibes too. If I'm just getting washed and nothing's going my way, I'm just like, yeah, no. And then the way I break it down to try to quantify how badly it is isn't dollar P&L, it's points per lot. So say you're trading 5 lots and you're down, 1,000 bucks from 5-lot micro. You are the market, just don't even touch it. You are down a cumulative like 100 points. So no. Right. So points per lot is a pretty decent gauge. If the market's taking that many from you, that many points, it's not your day. And it will not turn around and be your day. You guys want a short? It's possible, honestly. Every attempt they've put in to go higher has been a taper.
yeah.
So ES can certainly retest those 30s.
I mean, it wouldn't even mind it going on a 39s. Catch
Yeah,
the
it
overnight
can
low.
definitely retest and then could still bid it.
Exactly.
It would be the same idea as earlier in my trade. It's like I think we are going to get a retest. So if it does taper, I can get a reoffer and pay myself on that way. And when it gets to the spot, the 30s, where you got to sort it out, you can flatten there or you can hold it if you think it'll crack. Looks like Chad is short. Okay.
Everybody's short. Good for you guys. Team low of day, new low of day, full gluten. Hey, I don't mind it because that'd be still fun to continue to try to trade.
I like the energy. We shorting this motherfucker. Team low a day. Let's go. One guy's like, I'm long GC.
Whoa, what was that?
That was,
That was more sellers just getting
they
obliterated.
were in the chat reading it. They're like, oh,
Wow,
okay.
that is just nasty, guys.
Where did ES get to? ES got
It
to
stopped at like 54s, or basically the 30-second opening range low.
So NQ tapped the 9. ES almost did. It's a good squiggly line. XYZ, I need some of that mentorship, brother. Well, when I find out a way I can charge for something like that, I'll let you guys know. But for now, I don't have any. I'm sorry. The easiest way would be to make a Discord, but even that is a lot of work. So for now, enjoy the playbook, and hopefully you won't You won't need any mentorship at all. Talk about entry process. Now I can say, David, uh, check out the playbook. Everything that I do is in there in great detail, sometimes excruciating detail.
Hmm.
But yes, that is what I like as well. Finding that taper first, right? Finding where the effort to push starts to wane, and that's where you want to be. That is the advantage, and we want the advantage.
Where's the playbook? You can find them on paintingthetape.net.
.net. You heard it right. Thanks, production, for the link. It's right there. No, no, chat is about to be dust.
This is just a bit of a mess right here.
So in hindsight, those longs, huh? Below or when they reclaim the IB,
Yeah. I mean,
they just did not pull it back until finally they did. And well, that was pretty high up there. That was when it was like, okay, 50-50.
they're just getting the 10-point range out of the way now, so you don't have it this afternoon.
I mean, I hope it, yeah. Damn.
What
Those,
indicator do I have on the chart? I mean, it's just volume profile and a delta profile. And the rest is just MGI levels.
for anyone in the chat that thinks Nick and I are exaggerating, if you've been with us these past few months, we did have like 15-point ranges for an entire trade to close. And this was on multiple occasions.
Yep.
But we are back. Now it's a bit more extended. You guys still short? Full gluten is still short. He has definitely diamond hand in this thing.
Mega short from 54. I mean, it's not a bad spot there. 55, like the top edge of that little consolidation, worth a shot.
First test of RTH Open is always really reactive too. You guys can keep that in mind. First
What's
test
RTH
VWAP,
open?
first test Open.
Where's RTH open at?
For ES, it is 57. 56 is.
Oh, okay.
So that's exactly like, yeah. It only got up to about what, 58?
Hey, gentlemen.
Hey, Jim.
Good morning, Jim.
Good job today. How you guys feeling?
Feeling good.
Good. Fun day.
Quick day for me.
It's good to hear. Good to hear. Congratulations. I have to congratulate Nick, XYZ. Don't take it personally, but he was just on fire yesterday.
I
Thank
thought
you,
he
Jim.
had it. I thought he had it for a second.
I mean,
What a comeback from Salva.
the fact that I had to come back shows that that was my issue in the first place.
Oh yeah, it's
If
both of them just like passing the baton, like, oh, you're gonna make me trade now. And then the next person's like, oh, now I have to trade. And then it's like, oh, now I have to trade.
I mean,
if I
the thing about it was you have that profile, right? We see your profile, you're focused, like laser beam focused at making those trades at the end of the day. And
Mhm.
you were trying not to be distracted with the chat, but you had to participate at the same time, right? So I
Right.
could tell it was like it was weighing on you a little bit, but it was
Oh yeah.
awesome.
It always is. And when you're trying to hold on to a lead and these people creeping up behind you, and then you get the itch to throw on something else because you might need more cushion, and then you give back money. But I wish if I didn't have to dig myself out of a hole like twice yesterday, I think it might have been it might have not had to be a photo finish the way it was.
Yeah, but that's what made it exciting, man. I'll be honest with you.
Yeah, it was a lot of fun. I
Yeah.
really enjoyed it, and Salma's great. So congrats to
It
her.
actually
And congrats
came down
to St.
to the
Jude.
wire, like
It really
to the
did.
close.
Like we were both at like $1,800 when the double or nothing NASDAQ MOC was kicking in. And then my shorts just got blown up.
It was actually a true double or nothing.
It was.
Yeah. Yeah. Awesome. Well, it was for a great charity. All's well that ended well. We had a lot of fun. We learned a lot. Everybody was not only technically interesting, but also entertaining, which is important.
Absolutely.
So, in any event. All right. Well, other than that, XYZ, I'm going to be in your neck of the woods on Thursday night.
What are you doing?
So I don't know. Maybe I'll play Baccarat or whatever call it.
What are you here for? You're gonna play in LA?
No, I'm going to be at the F1, man, in Vegas.
Oh, my other neck of the woods.
Yeah,
My
you're
second,
home away
my
from
second
home.
home.
Yeah. You won't find me at the Baccarat table.
Good thing you reminded me yesterday because I didn't cancel my room yet, but I got that done before they charged me for it.
Oh, yeah. You better do it. Where were you staying at?
Always at the Venetian or Palazzo.
Yeah.
I'm loyal. I'm loyal like that. They treat me
Well,
well.
you probably get a free room, right?
Yeah, they give me like the max upgraded suites available. But it's not
Nice.
because of my play. It's because I made really good friends with front desk. And so I just shoot them a text like a week before I get there and they'll hold me something.
I haven't been in about 12 years. They forgot who I was entirely. So I'm literally like
You
scraping
can
for
build
the
back.
cheapest
You
room.
can build back.
Yeah, I don't know. I'm not a frequent flyer anymore, but I'm looking forward to it. It'll be a lot of fun.
It'll be fun.
So Craps is going to be, I spent a lot of time at that table.
Hmm.
I'm social. What could you say? Anyway, great job, you folks, today for sure. Appreciate your time and you being with us here on NinjaTrader Live. I'm going to do a quick edge report. We're going to take a look at some key markets really quickly, break for lunch, and we'll be back again this afternoon, regular time. So, guys, I will not actually. Will I see you tomorrow? Either
I'm
you
on
two?
every day this week. So
Okay. All right. So, Nick, if I don't see you, have a great week. Have a great weekend.
You too, Jim. Enjoy Vegas, sir.
I will, man. I will. All right. All right. Let's check out the Euro FX versus the US dollar. This is an interesting day today in the Euro. Remember, the dollar's in the denominator here. We had kind of a regular day. We had a nice point of control developing right at 16.15 and a half. And then all of a sudden, that 10:30 to 11 candle just fell out of bed for whatever reason. I don't know if it was a Fed speaker or what happened, but this candle is so big it transcended most of the whole entire value area. Like that's a bearish engulfing. If you think about it, engulfed the whole value area and then some. And then we kept on selling. We hit rock bottom right at that S1, and then buyers finally kind of slowed the roll a little bit here. So 115.91. So this was kind of an interesting move in the Euro FX. I'm not really sure what sparked it, but it doesn't matter. We really kind of hit a nice bottom here at that S1. These daily pivots are also pretty good. I mean, further selling can get us to JAX1. I don't know if we'll get there yet. That's at 1575. That's right where my crosshair says, right above S2. So Euro FX is in play, and we know from the challenge that there's some meat on the bone trading this currency pair. Let's shoot over to the Bitcoin real quick. Now, this surprised me a lot. I'll be honest with you. We got a green on the daily candle. I was kind of surprised. I mean, a 6-day sell-off. We're still way not out of the woods, right? 93,540 right now, last price on the Bitcoin. But look at this wick below. This is the most encouraging thing on this candle. We have a big wick at the bottom of this candle here. Buyers said, nope, rejected everything and brought us all the way back up almost to the top of the previous candle's open. So if we get there and then some, I'm going to say, hey, this might be an equal and opposite candle, which could be a bullish reversing sign. I'm not particularly bullish yet, but this is an encouraging step in the right direction. We got a long way to go. Remember, this 100,000 level is this old area support. Now it's a new area of interest, and we do have those March, April lows that we have to contend with intraday. Just to take a peek here, it looks pretty nice, right? VWAP, we lost VWAP in the rearview mirror during the London initial balance. Literally, we just, kind of got a little bit of a bid here in the London initial balance, and we created a point of control right at the top of that. And look at all these candles that traded through. All of these candles, 91, 475. And then finally, the US IB, boom, we broke out to the upside and then broke through that IB high and kept going all the way up to JAX2. We tagged JAX2. We're kind of off it a little bit, but I have a one-day max here on my radar screen, and that's a MenthorQ level. That's it, 94. Let me tell you exactly, 94, 85-ish, give or take. So right by that R1. So there's two areas of interest. And also you see this little orange line way over here. That's the midpoint of yesterday's initial balance. So a lot of areas of interest up by that one-day max. We'll see if we could get there or not. And then lastly, but not leastly, let's just shoot over to gold really quickly here. Remember, micro gold is 405,000 contracts already traded. Market is on fire. Daily chart can't get through that VWAP. These anchored VWAPs, if you get a chance, order Brian Shannon's book on anchored VWAP. It's really worth it. I anchored it to this high, right? This is the high close. This was on the 20th of October. And I drew that anchored VWAP all the way forward to where we're at right now. And you can see yesterday, entire body of the candle is trading below it. Today, entire body of the candle is trading below it. And not only that, it's right at my 38.1% retracement. Is that magic or not? I don't know, probably not. But 4088-ish, give or take, between 4088 and 4087. This is kind of a line in the sand for me. And look at the moving averages. The 8, the 21, they're converging to touch. They're getting really, really close here. So we'll see what happens going forward. Right now, I like the fact that there's wicks at the bottom of the candles. There's buyers coming in, pushing us up. Buyers coming in. Buyers coming in. Hopefully, one of these buying bursts will get us above the finish line there. Intraday, again, JAX4, top of the conversation so far today. Above that, should we get a breakout further up? JAX1, 41.20, and then that one-day max at 41.33. That is this morning's Edge Report. We are going to take a really quick break. Thank you for being here with us on NinjaTrader Live. Appreciate the thumbs up. Appreciate the subscriptions. It's free. Just click on those things. That'd be awesome. We really, really appreciate it. Best chat in the entire online trading community. End of story. Appreciate everybody. Even if you're not in chat, appreciate you listening and being part of the community. You are important to us as well. Having said all that, let's relax, take a quick break. We'll be back at 2:30 this afternoon, and we're going to keep rolling. See you then.